All right, guys. Microsoft earnings today. Microsoft quarter three. How about FRC today, man? Look at FRC down to $9, under $9. Microsoft down to 277s today. There might be a little dip buy to get involved with. I don't know yet. We'll see. Do me a favor, hit the like button. What's up, Ray, Tim, Sam? All I'm saying is I'm glad I got out of FRC earlier because man, I held it overnight and I cut it this morning at 12s or so. And I'm glad I did because I would have lost a lot. I'm still in Tesla though right now, so we're green in Tesla. Yeah, it might be dip by time. AMD down big, Disney down big, Microsoft dipped. A lot of extension on the downside. Hey, thank you, Sam. What's up, Ray? What's up, Kay? All right, guys. So AMC up to a little bit today, but AMC is losing its range. All right, let me get the music playing here, dude. I've been playing on one of these AI art generators, and they are pretty cool. What's up, Pawn? Yeah, Microsoft earnings today. Honestly, a big day. Um, what are you buying the dip in right now? I guess is the question. I just bought a little bit of Disney. I bought about 30 shares of Disney. Well, I don't. I'm not telling anybody to copy me. I have no idea what it's going to do, but I might be looking for some discounts in the SPY specifically right now, just by how much it's dropped. You know. Hey, nice pawn. That's a good trade, man. Microsoft pulling back down under 277s. Again, with the addition of Chat GPT, I think it'll be really interesting to see kind of what happens with all this stuff today. Market's down a lot short term. We still got a lot of room on both sides, to be honest, in my opinion here. Go ahead and send our newsletter out if you haven't already. All right, we just made a little bit on the futures market here. So we are now up about 50 bucks. Got a little bit of room to let the rest ride up here. We got 2 contracts left. We're up about 150 on the rest. So about 200 on the day and unrealized, about 50 and realized here. I'm gonna go and take one more off, just lock in profit, make it a green day no matter what, and then I'll probably let that one contract ride throughout the rest of the day. There we go. We are up about 113 on the day. And we just went ahead and locked the rest in. So here's our P&L. We noticed the extension. As soon as I sat down to look at earnings, we noticed the extension, and now we're up about 230 on the day. So far this week, I can't remember. I think I lost money yesterday. So yeah, so far we are oh, wait. Okay, it's not factoring in today yet. There we go. So we are slightly green on the week so far, but not by much. But yeah, we are up a couple hundred today. I still think we probably got some more room on the upside here too. But yeah, market's interesting right now. Microsoft down to 277s. How many coffees have you had today? One. I'm not like I drink coffee, but it's not like a huge habit of mine. Like right now I'm drinking a soda, Like coffee's a little bit too strong for me to drink later on in the day. I don't generally drink it later on in the day. It's third quarter earnings, Gregory. They all use different it's not perfect fiscal years, if that makes sense. So it varies. It's not perfect fiscal years, I guess is the easiest way to put it. Like they'll go back and forth. For whatever reason, this is Microsoft's earnings. All right, guys. So Microsoft here, vote on the poll. Looking at the poll number, we got about 50 votes already. 53% are bullish, 47% are bearish. We're going to go ahead and do a Twitter poll as well. Microsoft drops Q3. Um, we just locked in a couple more bucks in profit. We're just kind of riding the extension up currently, up about 260. Also, do me a favor. Hey, thanks, Ali B. Thank you, brother. I appreciate it, man. Thank you, sir. We're going to do a Twitter poll right now like we always do. All right, so let's see. Do they beat, miss, or come in neutral? You can vote on our Twitter poll right now. Beat, miss, neutral. Or do they come in as expected, I should say? A little bit better. Vote on the poll. We got the poll live on Twitter right now. Vote on that poll. We're also going to send our newsletter out like we always do. If you haven't already, hit the notification bell, hit the subscribe button. You can join our watch list here. With regards to Microsoft. Oh, it's the Donald Duck song. But yeah, you can see Microsoft dipping down a little bit. I guess the question right now is there any value to be had here? Like, are we cheap? We're gonna go ahead and cut a little bit more here. We're just kind of scalping some moves in the market right now. We just unloaded a little bit more here. We are now up about 380 on the day, 380 or so. Probably could have held it more. Again, I think the market's a little extended short term on the downside here. Um, there we go. All right, so yeah, we're gonna send our newsletter out. Go ahead and send that out now. But yeah, thank you, Ali B. I appreciate it, man. Tesla might be coming back. Yeah, maybe. Do you make most of your money from shorts? No. This was long. These trades were mostly on the long side. Again, what I did just now, um, is I most of the time I make money on the long side. Like I short stuff too, but most of the time I make money on the long side. Again, what I see here now is I see like big weakness right now. So I just see big weak action right here. This is just a lot of down. Um, Generally the market's not just going to go down and down and down and down forever, So like if we drop significantly, eventually the momentum is going to switch. So like eventually if we drop enough, the momentum is going to pivot to the upside. Like people are going to start taking profit in their shorts. They're going to start getting more confident. It's all like human nature. You got to look at stocks like when Microsoft or Google or Amazon is down as much as they are today, eventually human nature is going to kick in and people are going to say, hey, well, this looks cheap now. Like, let me buy up a few shares just to see what happens. And when everybody starts doing that, you get these upward movements. And so that's essentially what I bought. So I basically just kind of bought down here towards the lows and took profit at the top. And that's basically it. Uh, hey, what's up, Jay Victor? Don't try to tell me you're the only YouTuber who's honest about your P&L. Then I'll know you're lying. Well, I don't know if there's other people who are honest about it or not. I don't know. I know most people are out here trying to sell courses, and that's fine. Like, there's some good courses, but I'd rather just not have that pressure. You know. But how about FRC? The big story of the day really is FRC here. I'll put this up. This is some AI generated art. So this is AI generated right here. So like, look at this. So this is all AI generated completely. I basically asked it. I fed it some keywords and it spit that out. So interesting. But yeah, completely AI art. You can follow me on Twitter. I'm going to be playing around with AI art generators. If you want to follow me at Beginner Trades is the symbol. Yeah, Google dropping their numbers too. Yeah, good, Sam. Yeah, again, I'm starting to get. I bought a little bit of Disney here, for like like I bought up some Disney. I'm still in my Tesla trade from earlier, but I've scaled out of most of it. Um, I'll probably end up cutting it pretty soon. I mean, we've already bounced back enough to profit on. Uh, so I guess I'll let it ride a little bit more, but Google expectations for revenue are 56.96 billion, down 16% year over year. EPS of 224, down 4.5% year over year. Yeah, for sure. JP Morgan wants FRC to drop so they can buy them. Maybe. What made the market fall? Mostly FRC's weakness. If you look at FRC right here on the left side, First Republic Bank dropped their earnings, and they have been in a disastrous couple hours here. They were at roughly $16, $17 at the closing bell yesterday, 16 or 17 bucks. Today they hit lows of $8.27. So they're basically down 50% relative to where they were yesterday at the closing bell. So just big price swings in FRC. Y'all be careful. Big price swings. Yeah. FRC has that much weight in the market. It's not that it has like it's not that it's weighted heavily to the market. It's more so that it's sentiment driven. So FRC's failure reignites fears with regards to a recession. Like recession fears are reignited with FRC's downfall. So as FRC drops, people are more worried about banking problems. They're more worried. Like a lot of people, me included. I became a lot more confident in stocks, buying up stocks over the last couple weeks as the banking crisis subsided a little bit. At this point in time, though, with FRC falling as much as it has, that could spell real problems for banking, for the economy, for everything moving forward. And this is not a dull week. We got a lot of big earnings this week. And so, for instance, like if Microsoft comes in hot for earnings, like if they come in bad and have lower than expected numbers, if Google comes in low, if tomorrow Snapchat, Facebook come in low, if Thursday Amazon comes in low, the market could have a pretty big effect from all this stuff. You know what I mean? Like this is not small stuff. This is like right now, what we're in the heart of right now is earnings season. Right. Earnings season only really happens once a quarter. Once a quarter, we'll get a couple really busy weeks. Last week we had Netflix, Tesla, and bank earnings. This week we have First Republic yesterday, Microsoft, Google today, tomorrow, Meta, Snapchat, Thursday, Amazon, Friday, oil earnings, right? These are all heavily influencing stocks that will move markets if, they come in hot or they come in bad or whatever they come in as. And so they're influential over market activity. And so we're already having a lot of volatility from the FRC First Republic drama that's going on. And so, for instance, if we get some bad earnings reports here, the market can move heavily down. And that's a risk right now for sure. Like that is something that certainly could happen. I'm not saying it's going to, and the market is still up a lot over the last 6 months, but that is a risk. If all these earnings come in rough, which they could, I'm not saying they are. Yeah, that could spell bad things for the market and economy, but we'll see. Again, nothing's for sure. But we'll see. First Republic needs to hold as the first step, really. Like First Republic needs to do good enough to not fail. Also, keep doing that. Do me a favor, hit that like button, guys. Keep bumping those like numbers up, team. We appreciate it. And yeah, we'll see what happens here, guys. We got a couple votes already in terms of Microsoft. About 52% think Microsoft's going to beat, 41% think they're going to miss, and about 7% think they're going to come in as expected with regards to Microsoft here. We also have Google earnings coming through today. We will cover Google earnings as well, of course. Big release here. We will put the expectational numbers up on screen so you guys can see it for Microsoft, Google. Um, yeah, it's a big day for earnings. Tomorrow's big. Thursday's big. Thursday, we also have GDP data. So, like, this is a very active week. It's a busy week for me. Like, being running a stock market community and like a economic release channel is kind of what this is. Like, beginner trading's kind of slowly evolved into, we day trade and we swing trade and we invest, but we also mostly like our growth comes from economic releases and stock market news. And so this week is a very busy week. Yesterday we had FRC. This morning we had Verizon, McDonald's, Shopify, GM, GE, just a list of other companies: Halliburton, Pepsi, 3M, Raytheon, UPS. All those dropped this morning in terms of earnings. Those all came out this morning. We're going to go ahead and cut the rest of our Tesla. We're up pretty decently on it, made a decent little gain from that. But yeah, all those were this morning. Now today, in about 35 minutes or so, we get Microsoft, Google, Enphase, Visa, Chipotle, Texas Instruments, Boyd Gaming, and more. Tomorrow, like I said, we get Boeing, Hilton, Hess, Humana, Thermo Fisher, Boston Scientific, CME Group. And then in the evening, we get Meta, Facebook, Roku, Teladoc, eBay. All right. O'Reilly Auto Parts, Save Airlines, Spirit Airlines. We get all that stuff coming out in terms of earnings tomorrow. And then Thursday, we get Amazon. So Thursday, we get Caterpillar, American Airline, Crocs, MasterCard, Eli Lilly, Domino's, Valero, Southwest, Merck, Altria. And then in the evening, we get Amazon, Snapchat, Intel, Pinterest, Activision, T-Mobile, US Steel. And those are just the earnings. Okay. So Thursday morning, we get GDP data coming out. We get gross domestic product data, very relevant data with regards to inflation, with regards to economical growth, with regards to fears of recession versus inflation problems. All that stuff is going to, cause some interest in the GDP report, which drops at 8:30 Eastern Standard Time Thursday morning. And then Friday, we get PCE, the PCE deflator, the personal consumption expenditure, which is an inflationary gauge. It's actually the inflationary gauge the Fed uses to determine how bad they think inflation is. So, like, a lot of the time, people like me and other retail traders, for instance, will look at the consumer price index, CPI, to gauge inflation problems. The Fed actually uses PCE. They think it's a little bit more of a natural inflation reader as opposed to CPI and PPI and all that stuff. And so Friday's PCE, Thursday's GDP, we got a whole gang of earnings coming out this week. And then next week, we get the rate hike decision on Wednesday. And so it's a busy couple weeks here for the channel. It's a busy couple weeks for market activity, and it could get volatility as a result of all this stuff. There's a lot of releases, a lot of stuff, tech earnings coming out this week, of course, today and tomorrow and Thursday. And then that's not even including other earnings and stuff like that that we got coming out. So yeah, it's a busy few weeks, guys. We'll see what happens. Yeah, a lot of stuff coming out. In terms of expectational numbers for today, though. So today we got Microsoft and Google earnings. Microsoft is expecting 222 EPS. And remember, EPS is a gauge on how profitable a company is. Its earnings per share is what the abbreviation stands for. So EPS expectations for Microsoft are coming in at 222 on 51.03 billion in sales revenue. Google is expecting 106 EPS, so EPS of $1.06 profit on 68.85 billion in sales. So again, we'll see what happens there. Visa expecting 197 on 7.78 billion. And we'll put these numbers up on screen so you can check them out yourself. But again, Microsoft is expecting EPS of $2.22 on revenue of 51.03 billion. Google is expecting, or I'll say Alphabet, and it's really what the parent company is called. Alphabet is expecting $1.06 EPS on 68.85 billion revenue. So that is what we got right now. That is what we got right now. And yeah, we'll put this up on screen. Both the numbers drop after 4 p.m. All right, guys. So yeah, we're gonna put this data up on screen here. There is the data. Yeah, Microsoft will be big, especially like I think the interesting part of Microsoft earnings is like the influence of Chat GPT and everything like that. We can look at the EPS graph, which has kind of been something I've been using every day to kind of show what to maybe expect here for Microsoft. But I think like okay, so here is Microsoft's um, historicals with regards to EPS here. So quarterly, last time they came in at 220. Again, this time they are expecting 222, so they're expecting a little bit better than previous here for EPS. You can kind of see Microsoft has had a pretty strong couple years, really here. Last 3 years have all been profitable. The last losing EPS was back in 2018, 2017, really. So it's been 6 years. Um, and yeah, we'll see what happens here. So Microsoft for the quarter ending was 220, 11.29 decline year over year. EPS for the 12 months ending last year. So EPS from 2022 was 901, 4.05% decline. So yeah, we'll see if we get any interest here. We can also look at Microsoft revenue graph to do the same thing. And again, the way I always try to explain these earnings metrics is that like EPS is a gauge on profitability. It's margins. It's how good the company is doing with regards to margins, profit, how much they're profiting per share, what their margins are like basically. Sales or revenue is basically the ceiling that they have to improve their margins, so to speak, right? Because like, okay, if you have enough money coming in, you could always fix your margins, so to speak. But if your margins aren't good, it doesn't really matter how much money's coming in. It's going to depend on if you're profitable or not. But these are two behemoth companies that don't matter. We can look at Google as well. Uh, and yeah, Google, or here's Microsoft in terms of revenue. Last time they reported 52.74. If we round up, it's 52.75 billion in revenue. This time they're expecting 51. So they're expecting this to bump down a little bit here. So their revenue could bump down a little bit here, and that's what they're expecting. If we look at Amazon or Google, again, I think the Chat GPT data or the Chat GPT acquisition and all that stuff, they're almost certain to talk about that a little bit here. If we look at Alphabet is expecting $1. They showed $1.06 last time, and so they're expecting basically the same thing. Last time they showed $1.06, so they have basically done $1.06 EPS. If they come in as expected, that'll be the third consecutive time that they've done 106 EPS in terms of earnings per share. They're expecting 68.85 billion in sales, 68.85 billion in sales. So we can look back at that and look at their revenue graph here and see what they are doing now. So yeah, they are last time they showed up at 76 billion, basically right over 76 billion. This time they're expecting 68.85 billion. So a little bit of a decrease relative to the previous one in all of this, right? So they're all basically expecting somewhat of a decrease relative to the previous December quarter that they put in. FRC, guys, is still bumping down here. It's down to 850 right now. 850s for FRC, still dropping pretty fast here. Oh, dang. No. Spilling soda all over my desk. All right, well, get this cleaned up. Hey, what's up, Eric? All right, guys. So yeah, we got 25 minutes before the earnings drop. 25 minutes. Most people on Twitter are guessing a beat here, so they're expecting a beat here with regards to Microsoft earnings. And again, I think Chat GPT will be interesting. You know, yeah, I think Chat GPT, the influence of that with regards to like Microsoft and earnings will be key here. Yeah, I don't know. I think the market's just down a lot. I mean, we're testing lows again. And so again, I don't mind buying up more stuff here if the market keeps flushing down. You can see Microsoft on the right. Here's the SPY testing lows again here. We're right at lows again. Down to 406.50s here. Microsoft just cracked lows. Yeah, I don't remember how much this desk was. It wasn't cheap though. This is one of those standing desks. I never even use it though. But but it's all good. Yeah, team. About 25 minutes until Google Microsoft earnings drop. 25 minutes, team. Again, do me a favor, bump that like number up. I'd love to break 100 likes before the closing bell. Look at Microsoft tap lows again here. Still at lows. Or Microsoft break it down under 276 whole dollar level here. See if Microsoft holds here. Look at this breakdown. Again, I have used Google Bard. One of the things that Google Bard is doing well, I should say, is programming dedication. They're dedicating a lot of it to programming. They're improving it to work with coders and programmers, and I really do think that's the future of AI. Um, Spy bouncing up a little bit, but Spy has been in this range here for minutes and minutes now. If we put this up a little bit, look at the range the Spy's been in here for a while now. Yeah, let me see. Looking at our poll numbers here, we do have some poll numbers. Again, 51% are bearish, 49% are bullish. Microsoft finally starting to bounce back a little bit here. Again, do you think the market's going to break lows and continue down? It's a red and fiery day in the market. Again, we still got 20 minutes. 20 minutes until the data comes out. SPY looked like this at 410 all morning, then it dropped. Be careful. Yeah, for sure. It's been a couple choppy days, and so it's actually not a. At least we're getting some type of range movement, I would say. At least we're getting a little bit. There goes Microsoft bouncing back up over 276. SPY is kind of retracing a little bit with that as well. Yeah, carnage, dude, for FRC, bro. FRC absolutely destroyed. It's straight up dumpster fire, man. We made a picture. We did a we got one of these AI art generators to build us an AI generated art about FRC, and this is what it gave us here. Um, so you can see it says FRC on it, dumpster fire. Yeah, and I think it's just causing a lot of fear. Could you please explain how earnings work and how does it affect the market? Sure. So earnings are every public company drops earnings every fourth quarter for the most part. Um, every four times a year, every quarter. Now some are on different fiscal schedules. Like Microsoft is reporting third quarter earnings, but a lot of them are reporting first quarter earnings. But again, some of them are not on the actual like fiscal schedule, or then they're not on the actual like conventional calendar. Um, but basically, companies drop earnings, and there's two major metrics that they'll generally put out. One is EPS, which is again earnings per share. It's profitability. The higher the number is relative to expectations, the more profitable the company was in that specific quarter. The lower it is relative to expectations, the worse and less profitable it did in that specific quarter. The other ones are sales or revenue. Um, that is basically how much money the company's bringing in. And so yeah, they're very relevant. Sometimes companies will, what's generally standard is that some companies will report guidance numbers, so future projections. And so when you read an earnings report, it'll say like Microsoft sees, EPS being in this range or whatever it is. That's future projections. Those are very relevant. But if the company's large enough, it will move the market. The market, when we say the market, really, we're just talking about the S&P 500, the Dow, broad market ETFs that are made up of the largest stocks in the world. So yeah, if it's a big company like Microsoft, if it has some big market reaction with regards to its own stock price, it certainly could and can and does move the broader market as well. Because Microsoft, I think, is ranked what, number 2 or 3 in the S&P 500. Chat, correct me if I'm wrong. I think it's 2 or 3. Um, and I know a lot of people use the Dow or whatever you want to use. I like using the S&P. But yeah, so Microsoft is ranked number 2. It's weighted at 6.24% of the overall market. It goes Apple, Microsoft, Amazon. Those are the top 3. But again, in terms of weight, Microsoft is about 6% of the overall S&P 500. And so yeah, Microsoft breaks down. Market's going to break down in sympathy is what it's called with it. And again, these numbers typically drop every quarter. It's what traders refer to as earnings season. And like for me specifically, we cover all the big earnings. And so once a quarter we'll get a couple weeks like last week, this week, and next week that are just really really packed full of big company earning releases, and that's what we're in right now. So today we have Google, and we have Microsoft earnings. So two huge behemoth companies dropping their numbers today. Again, tomorrow we've got a bunch in the morning. I think like Boeing is tomorrow morning, and a bunch of other ones, and then we also have Boeing and a couple other ones in the morning, and then we also have Meta, and I believe Intel tomorrow evening. So yeah, tomorrow morning we got Boeing, Hilton, Hess, Humana, Tech, Thermo Fisher, Boston Scientific in the morning, and then in the evening we got Meta, Roku, Teladoc, eBay, Spirit Airlines, Pioneer, O'Reilly Automotive, QuantumScape, Aflac, a bunch of other ones to be honest. But Thursday's the other big one this week, which is Amazon. Amazon earnings are in the morning or in the afternoon, as well as Snapchat, Pinterest, Intel, Pinterest in the morning. And then next week, I'm trying to see when Apple earnings are. Apple earnings are going to be next week as well. So Apple earnings are next Thursday. Next week's a busy week too, to be honest here. But the SPY break it down some under the lows, right at 406.30s right now. I think Biden spoke about FRC today. Somebody, Ren, commented that on Twitter. Um, let me ask her about it. Where'd it go? No, she might have deleted the tweet, I guess, but I think she said somebody talked about it. Chat, y'all might be able to correct me if I'm wrong, but can y'all hear the music, chat? Oh man, y'all can't hear the music, bro. My bad, dude. I've been jamming out the music here. Y'all can't even hear it. There we go. Should be a little bit better. Our earnings come out in about 15 minutes. After the closing bell is generally when they come out. FRC just dumpster fire right now. Down to $8. Just tapped $8 at 790s right now. Just huge, crazy drops here. Microsoft starting to bounce back over 276. Disney all the way down to 98.30s. All right, so let's see if Microsoft starts to bounce here. It's trying. Still got about 10 minutes, guys. 10 minutes. We buying these dips. I've made a bunch of futures buying the dip. I've also added. I bought a little bit of Disney here, but these are. I'm willing to hold those long term if I honestly need to. But we've already made some in futures trading, buying specific dips in the market and then selling on the bounces here. So we're up about 400 on the day, a little bit less. Yeah, I kind of agree, Ramsey. That's kind of what I do too, man. I mean, I day trade, but like a lot of my trades are, a lot of my good trades are swing trades. Yeah, CXAI ripping up, I guess, just AI hype. Again, my question is like, how much is Microsoft going to talk about Chat GPT? Is the real question. That's what I want to know. Like, how much are they going to talk about Chat GPT and everything related to it? That's what I'm interested in. SPY still breaking down. Microsoft just broke lows again. All right, guys. So you can see Microsoft starting to pop back up. It's at 276.20s. All right, Microsoft starting to pop back up at 276.30s, 276.40s. With selling a put be roughly equivalent to selling a call. Sorry if I'm not a big options guy. Been holding Microsoft and Google all week. Not sure if I made a mistake. I don't know either, bro. Microsoft started to bounce back up a little bit, though. 276.50, 276.60s here for Microsoft. Starting to bounce back. FRC still down there at 816s here. So still down there pretty weak on the day. We got 8 minutes, guys. I'm going to put the timer up. Eight minutes. FRC testing lows again. Yeah, stocks can go up an infinite amount. They can't go down an infinite amount. They're not going to go into the negative. And so the risk of selling a call is that theoretically stocks can go up an infinite amount. And so, your losses could be infinite, if that makes sense. The problem with selling options is this, okay, is that a lot of people do it and you'll make money most of the time doing it. But the times that you lose, a lot of the time are going to compensate for the times you win plus more. And so there's just a lot of risk there, bro. Just be careful, man. All right, Microsoft still pumping up. SPY trying to find some legs down here at 406. Yeah, I don't know what Bitcoin's going to do today, bro. You get Bitcoin all the way down at 27,635, 27,635. So Bitcoin bouncing a little bit at the previous closing price, but it's still got a ways to go here. All right, guys, we got about 5 minutes left. 5 minutes. Good luck, team. Be careful. And just to give you the schedule here, okay, to give you the schedule, Microsoft is scheduled for 4:05 p.m. So really, I'm going to change this clock because it's actually going to go to really, we've got about 9 minutes until this data comes out. About 9 minutes. Microsoft scheduled to come out at 4:05. Microsoft testing lows again. We've kind of been in the sideways range now for a couple minutes at this point. Bitcoin's actually pumping up right now. SPY's testing lows at the bottom at 406. So yeah, we also have Google earnings today, guys. So remember that. We also have Google earnings today too. So we do have Google earnings. All right, team. Only a couple minutes here. Hey, buddy. Nope, nope. Hey, nope. You can't get paper. You can't mess with any of this stuff, dude. Not right now. No, you gotta talk to your mom about it, brother. All right, because I'm working right now and your mom's not. If you wanna ride out the bike. I don't know. You're gonna have to go find her, dude. Sheesh, man. My son's home from school today. My daughter got a concussion playing in a jumpy house, so she's home. My son's home. All right, Microsoft at 276. Yeah, we'll see what happens, Kim. Hopefully good numbers. We'll see. Again, 3 minutes, 3.5 minutes. We'll put Google up here as well. There's Microsoft on the right. We'll put Google up here on the left. Very interesting dynamic of like Chat GPT and all the stuff going on with this. Interesting dynamic for sure. Yeah, Google's coming out at 4 p.m. Microsoft at 4:05 p.m. So we got about 2 minutes for Google, about 7 minutes for Microsoft. Yeah, thank you, Ramsey. I appreciate it, man. Yeah, good numbers. Again, you can see the numbers. Microsoft expecting 222 on revenue of 51.03 bill. Alphabet expecting 106 EPS on 68.85 billion rev. Both reports go live at 4 p.m. Again, Microsoft scheduled technically for 4:05 p.m. Google on the left here had a rough day with everything else. Microsoft's had a rough day too, in all honesty. So, again, we got about 2 minutes left until. Yeah, if they say AI that many times, they're going to do well. Again, that's the dynamic I'm curious of right here. Is like, how is Microsoft? If I was Microsoft, I'd spam Chat GPT constantly. I just nonstop say Chat GPT. That's all I would do. And so yeah, we'll see. Microsoft bounced it up a little bit. All right, Google at 104.60s, Microsoft at 276. AMD was down. Yeah, I saw AMD down a lot. Less than a minute before Google here drops, guys. Less than a minute before Google drops. All right, guys, here we go. 20 seconds. Microsoft tanking down here. All right, guys. All right, let's pull all our sources up. Let's get ready. Nothing for Google yet. Nothing for Microsoft yet. All right, so there's a dip in Microsoft at 275s right now. There's the closing bell here. Waiting for the numbers to come out. I don't see anything yet. Nothing for Google. Nothing for Microsoft here. No, they're not dumping the market. What's really happening is that FRC Bank is having a catastrophic day in market activity, and that's causing recession fears is really what that means. That's causing bank run fears and weakness of fears of banking. That's what's really going down, and that's kind of dragging the rest of the market down with it. But don't get it twisted. It's banking problems is what's affecting the market right now. Banking issues are certainly what it is. All right, guys, so there's the closing bell. Nothing yet for Google. Nothing yet for Microsoft. Patiently waiting here. All right, there goes Microsoft here. Microsoft with a big green candle here. Huge green candle. Looks like they released a little bit early. Let's see it. Huge move for Microsoft. All the way up to 281 right now for Microsoft. 281. Visa just dropped their first quarter EPS of 209 versus expected 199. Revenue of 7.99 billion for Visa. So Visa beat both metrics. Waiting for Microsoft numbers here. Let's see if we can look it up a different way. Big moves on Microsoft. Microsoft posted EPS of 245 versus 223 expected, revenue of 52.9 billion, expected 51 billion. So Microsoft beat both here. Again, EPS of 245 versus 223, revenue of 52.9 versus 51.02 billion. So Microsoft did great here. Put the numbers up on screen right now. There's Microsoft numbers, and Microsoft is flying up over the screen here. Up to 287s right now in market activity, 287s for Microsoft here. So big run up in MSFT. I don't see Google out yet. I see Visa. We'll put those numbers up in chat, but Microsoft beat on both EPS and sales. There goes Google popping up now. So Google with the run up here as well here, team. So we're going to put these up now. Both of these are up big at this point in time. And honestly, I think the market needed this right now. With the whole bad day of FRC problems, the market kind of needed this. Let me look at Google to see if we can find it. All right, Google posted 117 EPS versus 106 expected. So Google beat on both as well. Again, Google didn't beat on both. Google beat on EPS. Revenue came in at 69.7. So yeah, they beat on both. So Google beat on EPS, beat on sales. Wait. Yeah, beat on EPS, beat on sales. But they're not reacting as well. But both Google and Microsoft did good. We'll put the Google numbers up in chat. Both of them beat on both EPS and sales revenue. So we'll put the data up on screen here. But yeah, both beat on EPS, beat on sales. We got some more metrics that we're going to cover in a second. There's the data so far on screen right there. Microsoft 245 versus 223, revenue of 52.9 versus 51. Alphabet 117 versus 107, revenue of 69.8 versus 68.9. And we're also going to throw it in sub-only mode, guys. We will stream the entire earnings call right here live. You'll be able to watch the entire earnings call live on stream. You won't have to go anywhere. We'll cover everything. You'll be able to hear it all fully live. But yeah, there's the numbers. Google beat both. And they are both loving life right now, flying up. Microsoft at 290s again. Google at 108s. Definitely helping the market right now. If you look at the SPY all the way back up to 407.50, 407.20s. So, but yeah. So again, to go a little bit more in detail about what's going on with regards to Microsoft here. Microsoft beat on both. They didn't give us as much info as Google did. Google posted. They dropped early. Google posted. Okay, so we're gonna go through all of this, right? So Google, Alphabet, that is, first quarter YouTube ad revenue 6.69 billion. First quarter Google services revenue 61.96 billion. EPS of 117, as we covered. Google advertising revenue for the first quarter for Alphabet came in at 54.5 billion. Operating income for the first quarter of Google or Alphabet came in at 17.42 billion. You can see it pumping up to 109s right now. Operating margin was 25% for the first quarter. Other bets revenue came in at 288 million. First quarter traffic acquisition costs came in at 11.72 billion for Alphabet or Google here. First quarter revenue again came in at 69.79 billion. So again, that's Google right now. That's Google. We will put the Microsoft data up on screen here so you can catch it. We will put the Google pulling back to that previous closing price level here. So Google pulling back now too. And again, Google beat on EPS, beat on sales. And then revenue came in as over expectations here. All right, guys. So Microsoft pulling back to 287s at this point in time, pulling back to 287s here. All right, forgive me, guys. There we go. Putting that Google numbers up on our Twitter. Give me a follow on Twitter if you want all this data reported to you quick. But yeah, SPY loving this. SPY back over 407s. Yeah, we're going to cover the entire earnings call for Microsoft. So you'll be able to watch the entire thing live right here. We'll probably stream a little bit of the Google call too. Yeah, there's the numbers on screen. Look at that retracement on Google at 108. Snap's not today. Snap earnings are Wednesday, tomorrow, Thursday, maybe. It might be Thursday. So Amazon and Snapchat are Thursday evening. Yeah, Amazon and Snapchat are Thursday evening. Snapchat drops at 4:10 Thursday evening. Texas Instruments just dropped their numbers here. We'll put these numbers up in chat. Texas Instruments posted EPS of 195 versus 178 expected. Revenue of 4.38 billion versus 4.38 billion expected. So inline revenue, better than expected EPS. EPS view second quarter guidance numbers came in a little bit better than expected. Revenue guidance numbers came in a little bit better than expected too. We'll put these numbers up on screen, or we'll put these numbers up in chat if you want to catch it. There is Texas Instruments data. PACW. Earnings due. Pac West. Honestly, the market needed this right now. With the doom and gloom we had from FRC today, the market definitely needed this today. It certainly needed it. Let's see if Google holds here. It's a great earnings report today for this one. Get all these numbers out. But yeah, Google holding over previous closing price. Green Day. Despite all the craziness, Microsoft pulling back down. So SPY's still down today, but not as much down after this latest move here. All right, look at Google back up to 109s here. Microsoft consolidating around 288s. Still got some time. Expect a volatile market, no breakout until FOMC get in and out. Yeah, I mean, the whole next couple weeks are very busy. We talked about this prior to the stream, or we talked about this at the very beginning of the stream, but the next couple weeks are crazy big in terms of volatility here. Like we've got, oh man, we got a lot of stuff going on over the next couple weeks. Again, just today, we got Google, Microsoft, Texas Instruments, Chipotle, Visa earnings today, just today. Just this evening, this morning, we had McDonald's, GM, GE, Spotify, Verizon, UPS, all this morning. So just huge week in terms of earnings releases. Following that, tomorrow, we got a lot of stuff to cover. And again, so subscribe if you haven't yet. Hit the notification bell. We appreciate it. Tomorrow's a busy day too, to be honest here. Tomorrow we've got in the morning, Boeing, Hilton, General Dynamics, Hess, Humana, Thermo Fisher, Boston Scientific, CME Group, AMT. And then that's just the morning. In the evening, it's even bigger stuff. We got Facebook or Meta, Roku, Teladoc, WM, eBay, Pioneer, Spirit Airlines, O'Reilly Auto Parts, and that's tomorrow evening. And then Thursday is a huge day for market activity. They're not just for earnings reasons, because Thursday earnings, we get Caterpillar in the morning, American Airlines in the morning, Crocs in the morning, MasterCard, Eli Lilly, Domino's, Valero, Merck, Southwest Airlines, Altria, Peabody Energy, Hertz, Honeywell, Bristol Myers, Hasbro, Overstock.com, Hershey's, Harley Davidson, Comcast. Just a lot of stuff coming out Thursday morning. But Thursday evening, Amazon, Snapchat, Intel, Pinterest, Activision Blizzard, T-Mobile, U.S. Steel. And again, that's just earnings. And there's a lot more, to be honest, in that list. But also that what happens Thursday is we get GDP data. So like with all the banking problems from today, with FRC breaking down and testing like $7 and $8 a share, just a huge weakness. It's down like 50% relative to where it was yesterday. So very weak day for banking in the market. You know what? The reason the market tanked today is because banking, reignited some fears, some recession fears, I should say. Because again, FRC, one of the banks that struggled during the banking crisis, dropped their earnings yesterday, and they have essentially just dumpster fired it down. FRC now is at $8.34. They broke lows again right before the closing bell. They hit 790s today, so they hit sevens today. That reignited a lot of banking fears, because like there's a big polarized dynamic of market sentiment right now, with a lot of people fearing a recession, with the banking problems. If the banking stuff spins out of control and there's a bank run and some banks fail, and that could drag the market into a recession. That's what a lot of people are fearing. I'm not sold on that. I don't think we'll actually get there. Hopefully it's isolated to just FRC. If it is even FRC, I think FRC will still probably be fine though. But we also have inflation fears. So we're in this weird market of fearing recession, fearing inflation, with economical data. Like again, Thursday, we got GDP data coming out, very relevant for market activity. PACW just dropped their numbers. They came in at 66 cents versus 98 cents expected. Total deposits increased 1.1 billion to 28 billion at March 31st, compared to company's most recent updates of 27 billion as of March 20th. So PACW, we'll put these numbers up on screen. These have a lot of people talking here. Somebody else mentioned this one earlier. If we put it up, big move up and then big move down. I think this is a banking related stock too. But yeah, the point is people are fearing both a recession right now in some ways and inflation. And so we have gross domestic product. We got GDP data dropping on Thursday. It will be relevant for everything that's going on in market activity right now. It will influence everything. It'll be relevant for all this different stuff for banks. And as we see today, problems in banking can trickle into the rest of the market here. And today, problems in banking can trickle into everything else, as you see today with FRC and the whole market essentially crashing down today. But we also have Friday morning, excluding all the earnings reports and everything like that, just to show you how kind of big of a week this is this week. We also Friday morning have PCE data. And if you ever listen to Jerome Powell, Big Papa, he will generally say that the Fed specifically uses PCE to gauge inflation over any other metric, right? It stands for the personal consumption expenditure. Very relevant data because of that. So we'll see what inflation looks like on Friday. We'll see what GDP data looks like on Thursday. We'll see what all these other earnings stocks come in as. But yeah, it's going to be a busy couple weeks. And then next week, we got the rate hike decision. We have, like I said, next week, we got the rate hike decision. We also have Apple earnings on Thursday. And so it's just going to be a whirlwind couple weeks. Y'all be careful. Market volatility can be high right now. And again, we'll see what happens with FRC. Yeah, y'all be safe. And again, we'll see what happens. I bought up a little bit of Disney just now, and we're riding it up. And I know I'm going to get some. Don't buy Disney, bro. Disney, they got a bunch of new Star Wars movies that they announced too. If I can hold Disney for a couple years relative to under $100 in price, I think, maybe we'll get some gains. I don't know. I have no idea. Disney might just crash tomorrow. Don't copy me. But yeah. Amazon's not out with theirs. Amazon comes out with their earnings day after tomorrow. So tomorrow is Meta, which might influence crypto a little bit more. Today is, again, Microsoft, Google. And then Thursday is Amazon and Snapchat. Yeah, all good, AV. Yeah, y'all hit that subscribe button. We cover all the data live. Again, we're going to stream the 4 earnings call when it goes live as well. All right, guys. So I don't know what Chubb CB is. EPS of 453, 447 expected, better than expected EPS. Again, Google's still consolidating after making these huge gains in price. Bro, like this is a question I have, right? So like I had a guy comment on my video and the dude's like mad. I don't know if he's mad that like like you look at his channel and it's like a super negative comment. It's like, "Oh, I give the video a 2 out of 10." He says, "Don't be greedy." He says all this stuff. You look at his channel, like this dude's just mad that he failed trying to do what I'm doing here. You know? Like he's just mad he failed. Like that's all it is, you know? So it's like I've noticed a very strong correlation between like people who had failed YouTube channels being really negative to people who don't have failed YouTube channels. You know what I mean? Like very strong correlation. Like some of the biggest haters that you'll get on the internet are people who try to do the same thing. So like, listen, let it out, guys. Let it out. It's okay. I'll be your therapist here today. Disney running up a little bit. I'm probably going to take a little bit of profit here. I'm not sure yet, though. We'll wait. We'll cover the 4 earnings call live as well, so stick around. Hey, thank you, Bernardo. I appreciate it, my guy. Thank you, man. Maybe earnings are good because of inflation. Very, very correct. You know, very possible thing. Hurt people hurt people. Hey, that's right. You know. Again, I'm in Disney right now. I don't know if I'm going to take profit yet. I think I'll just chill here. ENPH, John. Oh, my bad. Pawn told me to look at this one too. Hold on. Let me take a look at it. My bad, guys. Wow, look at ENPH, In-Phase Energy Oil. See, I don't see this one reported here though. So like whatever platform I'm using is just late on reporting this. ENPH, dumpster fire right now, guys. This thing is down huge. EPS of 102. They beat expectations here. They came in at 137 versus 120 estimates. Sales missed expectations though. Weaker than expected second quarter revenue guidance. So they put in second quarter revenue guidance in a range of 700 to 750 million versus the estimate of 772. So worse guidance than expected. Also missed a revenue metric. So that is why ENPH is down. This might affect all of oil here. The question is there like a dip buy to get involved with? I don't know. ENPH is a good company. I'm not really like, I've never really been a big ENPH person. I don't know enough about it. And generally, I try to invest in companies I know really well. But this is oil, correct? I see energy in the name, so I'm assuming it's oil. It's also had a pretty good year prior to this. Where's it at now, guys? It's down to 180s. It's still green on the year despite this drop. Yeah, it's still at about 190 here. All right. We're going to take a little bit here. Just play around with this thing for now. We'll see what happens. Solar energy. Okay. Yesterday, you were wrong about FRC. Oh, I was super wrong about it. Definitely wrong about it. Probably one of the most wrong I've ever been about any stock for sure. But again, that's all right. You know, I did sell mine this morning. So to be honest, I got out roughly break even. And the reason I got out roughly break even, if you guys told me, is number one, I wasn't super wrong, but like what I did was I bought FRC after the dip, right? So I bought FRC after the pullback yesterday. So I bought it up at like 1380s, if you guys remember me talking about it. And then when it bounced it back up to like 1550s, I took some profit there. And then I held a small piece of that position overnight. Which turned out to be a rough overnight session. But the point is, I ended up selling all of it before this drop really happened. Like I ended up losing $10 on the remaining position today on the trade. And so I probably got out somewhere around flat on the position overall. But yeah, I was hoping it would bounce back, but then it just turned into a dumpster fire. And so, you know, yeah, I mean, it happens. I'm never going to be right about everything. It's all good. Okay, well, import, man. If you follow me, even though I tell you not to follow me, bro, 100% your fault. I got a feeling you're just trying to be dramatic. But yeah, again, don't follow me, bro. I don't want anybody to follow me. Again, as I say 1,000 times, I might have no idea what I'm talking about, be wildly wrong about anything and everything I say, and whatever I'm buying might crash tomorrow. Okay? Don't copy me. If you copy, it's your fault. I don't want you to copy me. Again, if you're copying somebody called beginner trading, that's your fault, bro. Cheers to you, man. But yeah, again, I don't know what FRC is going to do. A lot of people think it's going to fail. And yeah, we'll see if it does or not. But all right, so we did buy a little bit of ENPH. We're going to slowly scale out of this position now here. So we just made about whatever we made in about a minute or two. I'm going to go ahead and cut it right there. Oh, no, I just shorted. Oops. Wait, I'm short. Okay, we just made about 30 bucks in about 2 minutes, so that's fine. We're out of that. I'll take that. That's not bad. Yeah, copy Warren Buffett, not me, dude. What's up, Derek? Yeah, all good, man. Everything's all good, brother. Again, we made some pH money, but it wasn't a lot. But we are green on the day now, so that's nice. Yeah, like I said, man, I'm not a genie, bro. I don't know what's going to happen and everything. If you choose to copy me on any trade, bro, even though I fill this stream with like, hey, don't copy me, not an investment professional, might be wildly wrong about everything. I have no idea what I'm talking about. Do not copy me. You know, if you choose to copy me despite all those disclaimers, I mean, listen, you know, I diversify my trades. And so like I'm not gambling away at FRC. Like I'm not putting any type of significant money. I might, like I said, I might have lost $10 on FRC total, the entire trade. And so y'all don't know how much size I'm buying. Like copying me is just a bad idea. Again, it's one of those things where it's like I'm making trades all the time. Like I don't tell you guys about every trade I get into. And so, yeah, you're not going to be able to maneuver like I can in the market, regardless of any of that, you know. Again, and when I do trade stuff, it's very small. I'm not risking any part of my account. And I think a lot of people struggle with that. And so, again, do not copy me. Yeah, for sure. Crypto. Would you rather have expensive gas and make money on oil stocks or the other way around? Well, that's kind of a vague question. I mean, it depends on how much money I'm making in oil stocks. Like, listen, if I'm making a couple million from oil stocks, I'll pay $10 a gallon. I don't care. But if I'm making $30 from Exxon dip buy, then no, I don't want gas prices to go up. So of course, I mean that's going to be everybody in that situation. It's all relative to how much I make. Um, Yeah, ENPH. Again, we bought the dip. We took profit. Shout out to Sandy. Shout out to Pawn for telling me about the stock because again, I I I didn't even think to look at Enphase. Universal Health UHS dropped EPS of 234 versus 219, revenue of 3.47 versus 3.45 billion expected. Yeah, Microsoft's flying up right now. And again, I thought they might with like the addition of Chat GPT and all the stuff coming out for them. Understandable how well they're doing. Again, we got some Microsoft numbers that we're about to go over. So operating income came in at 22.4 billion. Net income came in at 18.3 billion on the year. Microsoft returned 9.7 billion to holders. So again, they returned 9.7 billion to holders in the form of share repurchases and dividends in the third quarter. Going to continue posting this here. Product revenue came in at 15.59 billion. Again, 15.59 billion. Third quarter services and revenue came in at 37.27 billion. Productivity and business process operating income came in at 8.64 billion. Productivity, yeah, we already went that. More personal computing revenue came in at 13.26 billion. Intelligent cloud revenue came in at 22.08 billion. Microsoft says, quote, Microsoft says that they're continuing to engage with regulators reviewing the deal to buy Activision and are working towards closing it in the fiscal year of 2023. And so basically what's going on there with Microsoft, just to put it into perspective here, if they want to buy Activision Blizzard, but they don't want to get a monopoly, charge. They don't want to get charged as a monopoly. Whatever they call it. I can't remember what they call it in actual like legal terms. It's not a monopoly. They get charged with chat. What do they call this? I forgot. It's a very specific phrase or charge, I should say. Chat will answer me with this in about 15 seconds. But yeah, they basically don't want to get charged with having a monopoly. And so they're working with regulators right now. But they're basically, what this looks like to me is that they think the Microsoft Activision deal is going to get done. So let's look at Activision right now. Antitrust is what it is. Yeah, that's what it is. And honestly, Activision's up a lot from this. And so basically, maybe that's some type of sympathy trade that you could get involved with. I mean, I don't know. What it sounds like to me is that Microsoft's pretty confident that the deal is going to go through. Again, I have no idea if it's going to go through or not. But I think there could be an argument for like a dip buy waiting for that Microsoft deal to go through. I think if Microsoft buys Activision, of course, it's all relative to what price they buy it at. But I think there could be a trade there. I don't know. Don't copy me. I might be wildly wrong. Maybe Activision crashes and the deal doesn't go through. Again, no idea. Don't copy me. So again, Microsoft up 289s right now. Let's see if we can break 300 eventually. Yeah, antitrust. There you go. I said the chat would get it. Microsoft is buying at $95 on Activision. Is that confirmed or? Yeah, we'll put Google up here. Look at Microsoft pump up, though, guys, at 289s right now. So making moves. Chipotle dropped their numbers today, too. All right, guys. So Microsoft consolidating up there, and again, we still got some time before the actual earnings report comes out. And again, we will stream the entire thing. Guidance is uncertain for the next 12 months. Congrats, Rocky Man. That's a good trade then. Why is Chipotle over 1,000? Crazy. So I'm gonna teach you a little bit about stocks, sir. I once had the same question, a long time ago. And for people that don't understand the market, and I'm not trying to shoot shots at you. I'm just, again, I had the same question once. You might say, hey man, why the heck is Chipotle worth more than Microsoft? Why is Chipotle worth more than Google, Price, and Microsoft combined? It's not. It all has to do with how many shares that are floating around out there. And so, for instance, the shares are called the float. You can think of how many shares are floating around out there. That's how I always remember float. But we're really going by outstanding shares because that's all the shares, including executive-owned shares. But regardless of that, basically, a company can be much less in price, but still be worth far more. When you want to look at company value overall, you don't want to look at stock price. That's not going to tell you the value of the company. If that was true, again, Chipotle would be a larger company than Apple or Disney or Amazon or whatever. And of course it's not. You got to look at market cap, right? Which is outstanding shares multiplied by stock price. So if we look at Chipotle, which is CMG, Chipotle market cap currently is 49, roughly 50 billion, right? So it's not a small company, of course. It's 50 billion in market cap. It's a big company. It's got about 27 million shares in the float, about 28 million shares in the float. And so it's not a small company per se, but when you look at like the easiest example is Apple here, which is the largest company in the world. Apple, again, Chipotle's got 27 million shares. Apple has almost 16 billion shares. Right, so Apple's market cap is about almost $3 trillion in market cap for Apple. And so again, you can kind of see the difference. Point is, Apple might be less in stock price, but it's got way more shares that are floating around out there. And that's the thing you always want to understand about it. So point is, Chipotle is over 1,000 because they don't have that many shares out there, which also means that it's easier to move and manipulate the stock price. When you have less shares that are floating around out there, it's easier to manipulate it. That's why like penny stock gurus pump up low float penny stocks, is because they can move them. Because if you buy 100,000 shares of a million float stock, that's 10%. You're gonna make that thing move. If you buy 1,000 shares or 100,000 shares of a billion float stock, I mean, you'll make it move, but it's not gonna mean much. It's gonna be a much less of a percentage. Anyways. Yeah, Amazon was 3,400 at one time, and what they do is the reason they call them splits is because they're splitting the stock price up into smaller pieces, and they're multiplying the float and they're splitting the price up into multiple pieces. Tesla was over 1,000, Amazon was over 1,000. So a lot of the time the companies in that way will multiply the float and split the price of the stock so that they're more easily affordable for traders that don't have $3,000+ to buy one share. I'm not sure, Sam. I'm not sure the exact time. I don't ever have to worry about it. I just cut it before the closing bell usually. So in terms of like, Google buyback, let me look. CEO says the company is the platform of choice for the next generation of AI. Yeah, there's that word again. Again, I get why they're saying it over and over too. I don't know. I like Google AI, bro. I do like Bard. I've been using Bard probably more than I've been using Chat GPT. And so, Bard is good for programming. Let's look at Google. Somebody's saying something about a buyback. Google ad revenue drops for the second string quarter. Alphabet. Yeah, so $70 billion buyback for Google. Yeah, the food is that good. Yeah, I love Chipotle, but all right, but yeah, Google still holding up there. We had a few bounces after the pullbacks, but still holding up there. All right, guys. So yeah, we do have Microsoft earnings coming through pretty soon here. Google earnings call starts in about 20 minutes. Google up there at 109s right now, 108.80s. Still popping up to 109s here. Microsoft up there as well. And again, the market really needed this with the FRC problems and all that stuff. Like the market did kind of, need this. Let's be honest here. ETH is pumping. Yeah, let me look. So I could see probably the correlation there. Bitcoin up to 28K. So Bitcoin just tapped 28K again. Bro, you got a good vibe. I wish you all the success in the world. Hey, thank you, Cole. You as well, brother. Thank you, man. Also, guys, y'all check out Top Step. Top Step is one of my sponsors. If you want to day trade, get exposure to day trading stocks. And again, this is a sponsor of mine. I'm certainly biased in their favor. But if you want to get exposure to day trading stocks, but you don't have 25K, you can day trade the S&P 500, which is 500 of the largest stocks grouped into one fund in the world. That's what the S&P 500 of the SPY is. You can day trade that in futures with no PDT rule. And Top Step, if you want to get your feet wet, it's what moves with economic data. It's influenced by earnings. Like if you look at these earnings and then you look at the E-mini, so like the futures version of the S&P 500, again, it's a very similar move if we put this up here to what happened with Microsoft. Like look at the similarities between this and this. And so you can day trade this left one here with no PDT rule in futures. And Top Step is the easiest way to test your skill, but keep your risk small. So they give you a demo. They give you a profit target, a max loss, and you got to follow their rules. And so the base one's 50K. They give you a 50K demo. If you can pass their test and hit the profit target, which I think on the base one is $3,000 in profit, without losing $2,000 or $1,000 a day, so it's a 2 to 3 ratio, pretty reasonable. If you can do that, they fund you 50 grand with a 90% split. As long as you can follow their rules, they fund you 50 grand with a 90% split. And it's the most legit futures program in the world. And it really is the best of both worlds, where if you lose, the base package is like 130 something if you use my link. So if you lose, it's not the end of the world. You're down less than 150 bucks. But if you pass it, you get 90% of your profit moving forward once you pass the test and get funded. And so if you make 10K, you keep 9K. It's the most legit futures funded program in the world. They pay out millions, fund thousands of traders a year. And they're kind of who everybody else copies off of. Again, they've been around for over 10 years. Check out the link. Great way to help support the channel. Again, they are a sponsor of mine. I'm certainly biased in their favor. But Bitcoin just pumped over 28K, still making moves. All right, guys. So, again, we still got some time. Look at the E-mini pump up here. We can look at Google as well. At 109s. PACW is already out with their earnings here. So their earnings are already out. Again, PACW, I'll go ahead and give you a list of here. Chipotle did just drop their earnings just now. They came in at 1050 versus 892 expected in EPS. Better than expected. Revenue came in. So honestly, almost everything is beating expectations. And this is kind of what the market needed, especially with FRC problems. All right, so Microsoft CFO says that cloud demand is fueled by deal renewals, and the company is seeing good signs on demand for AI products. I had to turn the other way for a second to read something. So if the mic quality wasn't perfect for about 3 seconds, I'm so sorry, Josue. I genuinely apologize, sir. What can I do to redeem myself, man? But no, Microsoft still moving up. Holding is all you really need. A lot of the time, earnings, you'll see them go up and down pretty big. At least it's holding its gains. That's what it really needs. PACW did drop their numbers. Hold on, let me look this up. Yeah, so again, I'm going to put the PACW numbers back up here. So here's PACW. 66-cent EPS versus 98 cents expected. Total deposits increased about 1.1 billion. Increased about like 27 billion deposits. So that's a huge margin. And again, if you look at PACW now, they are gapping up big, even though they had a pretty big miss with regards to EPS. Meta and Amazon thoughts. Amazon's PE ratio is very high. So that's never that's typically not a great sign. But it is Amazon. It's one of the strongest companies in the world, of course. So I don't think that matters too much. But that's something to consider. The PE ratio is very high for Amazon. Meta is just up so much over the last couple months with the big resurgence that it made. So it's essentially gone from $88 all the way to $207. So, yeah, I mean, both of those are not really stocks that I'm looking to buy right now. But, they're interesting moving forward. I'm certainly going to cover the earnings on them. Yeah, Google's out already with their numbers. Again, I'm going to put all this stuff up. There's the numbers right there. Right there underneath me. Hey, thank you, Ali. So the SPY counts as a day trade, but if you day trade futures, what's called the E-mini, which is the S&P 500. So I'm going to do this really quick so I can keep these charts up on screen. Here's the E-mini on the left. Here is the S&P 500 on the right. So, it's closed right now. So let's look at the SPY. Right, you'll notice this is the same exact price action. But you can trade this left side in futures with no PDT rule. So you can day trade this left one here without the PDT rule restrictions. Is basically what that's the edge in futures, is that you can essentially day trade actively without the PDT rule. Google pulling back a little bit. Here's Microsoft. Google with a small dip here. Yeah, all good, guys. These companies are beating on everything but earnings. Oh, they're beating on everything earnings in general. I mean, most of these came in better than expected for almost everything. No, it's a futures market. It's a futures contract. And again, if you don't know what futures are, I'll post this link here. This is a... Yeah, here's a video kind of detailing Top Step and all that stuff right here. Kind of talks about what futures are, like why there's an edge. So yeah, the Google's earnings report starts in about 14 minutes. There's just futures. There's no PDT in futures, guys, is what I'm saying. People don't get it, or people don't care about inflation. I mean, they care about inflation. Inflation's getting a little bit better, but we're still way off target for it. So people care about inflation, but again, we're in a weird setup where people fear both. People are fearing both recession and inflation problems, so. All right, so we got a little dip in Google here. It's been a pretty green day for me all around. We did cut our end phase, so we made $30 or so from end phase in about 3 minutes. We're already out of it. We're flat on it now completely. But I'm curious about maybe buying a little dip here. I don't know yet though. Has anybody tried cold showering? Honestly, bro, I saw this Chris Hemsworth thing with my dad where he talks about like in the shower switching to cold water for the last 30 seconds of your shower. Bro, I thought I was tough. You try that, bro. You that's pain right there. You know, going from nice, warm, cozy shower to all of a sudden cold. Ugh, it's tough. But they say what he said was that doing so decreased illnesses by at least 30%. I don't know if I buy it. Again, I don't know if I believe that. I'm kind of a skeptic in nature in that way. But let me know what you guys think. Y'all do cold water therapy? There was a time a couple weeks ago where this was like a couple months ago, really, where I heard this and I heard it had all these benefits. And this was in the middle of winter. This was like January or February. And I jumped in our pool at like 9 o'clock at night in the winter, and it was cold. I only stayed in there for about 2 or 3 minutes, but man, cold shower is awesome. ENPH. Yeah, Google. Again, I'm tempted to buy the dip here. I don't know if I want to or not, but I'm tempted to buy the dip. Seems like you mostly short. Bro, I don't even know if I've taken one short all day today. I might have short at the opening bell, but I don't think I've taken one short today. It's mostly been longs. Again, I bought ENPH long, made money. What else did I buy today? I bought Tesla long, made money. I bought the E-Mini a couple times, made money. What else did I buy? I bought FRC, lost money. Currently in Disney right now, long. Bought UPS this morning, made a little bit. Again, mostly flat now. The only thing I'm really holding is Disney. They have unleashed their AI chat by Trudeau. You don't know Google Bard, bro? Like I said earlier, I've been using Bard more than anything. Look. Like, look, here it is right here. Give me... Oh, look. Help me name my real estate podcast with a unique, marketable name that has never been used before. This is Bard right here. Let's see what it spits out. Oh, yeah. I don't know if it saw the never been used before. The real estate playbook, bro. Honestly, there's probably at least 20 podcasts with that. The real estate revolution makes them more unique. Those are too bland. Bard. Get it right, bro. The real estate adventure. These names are too bland and plain. Give me something more exciting. Bard. Let's see what the AI has got to say. The real estate hustle, the real estate showdown, the real estate renegades. I do like the real estate renegades. Maybe we'll consider it. Real estate disruptors. I do like the renegade one. I think that one's solid. ENPH, break it down. It's at 184.50. They say it's better for programming stuff than Chat GPT, but I don't know. I've never really like tested them back and forth together, you know. Can you use it to search up-to-date information? I don't know. Let's try. I've never actually tested it on that. List me 5 low PE stocks that have dropped at least 5% over the last week, or let's do the last 30 days. All right, there you go. Amarin, BioNTech, Cloudflare, Datadog, and PayPal. So yeah, it looks up relevant data too. I like Bard. Bard's actually really solid. Yeah, so I actually like it. I've used a little bit of both. I've used GPT. I've used Bard. As a programmer myself, Bard's a little bit better with programming. You know, it still makes mistakes, of course, like Chat GPT does, but it's a little bit better. All right, guys, Google dipping down a little bit here. So Google dropping down some. It's at 107.70s, 107.70s. Microsoft at 288, still holding pretty well, but yeah. CPI next is I think it's on like the 12th, if I remember correctly, right? It's something like that. What, Rocket Man? My chart see a positive divergence. Wall Street is buying while the stock is falling big time on 11 to 15-minute chart. Oh, you're talking to somebody else. My bad. I don't know what stock you're talking about, though. Yeah, it probably will, Todd. Todd says Google has so much data to make Bard good. Yeah, for sure. Okay. All right, guys. So yeah, we got about 35 minutes before the Microsoft earnings report. And again, we'll see if they say something positive here. Can I ask Bard to trade stocks for me? I mean, you can ask him. I don't think he's going to. Let's ask it. Can you trade stocks for me? I'm a large language model, also known as conversational AI or chatbot. I am trained on massive amount of text data, communicate human-like responses to a wide range of prompts. However, I'm not able to trade stocks for you. Trading requires deep understanding. Yeah, basically, Bard's out here saying call a lawyer, you know, and I agree with him. Why would someone not want to do futures over options? Well, it's just different things, man. It's just different things. So like options, you're basically buying like a contract with regards to like stock price. So you're basically betting on a specific price getting hit within a specific time frame. That's much different than futures trading. They're both contract based, but like contracts and futures means every quarter the contract expires. You just got to update it to the most recent contract with the most liquid movement in the contract. But aside from that, it's essentially like, aside from having to update your contract every quarter, trading futures is much more like trading actual shares than trading options are, right? So the E-mini is basically the S&P 500 in futures, but it's open in pre-market. It's open 24 hours a day. So the E-mini is essentially the S&P 500 open 24 hours a day. And a lot of the time on big market days, before the market opens, traders and investors and market analysts are looking then towards the futures market to get a gauge on what the market might do when it opens. Options are completely different. Options are just like a contract to hit a specific price within a certain amount of time. And so there's just a huge difference. Aside from that, though, like when you trade futures here, it's basically like trading stocks. Like you can buy market, buy bid, sell the ask. You know, the big difference is sizing. So like every symbol is going to have a different price or profit per tick. Like the E-mini that you see here, every time this moves up or down one tick, I make $12.50 in profit or losses. So if I got 2 contracts and it goes in my favor one tick, I make $25. If I got 4 contracts and it goes in my favor one tick, I make $50. You know, if I have one contract and it goes against me 4 ticks, I lose 50 bucks. And each one varies. You can scale down and trade a micro version of it called the micro E-mini. And so instead of being 12.50 per tick up and down, which again will move against you pretty quickly, it's instead $1.25 per tick. So you can buy like 5 or 6 and have relatively small amounts of range and movement, again, relative to the actual E-mini, which is kind of like having 1,250 shares. But aside from that sizing difference, it's very similar to just day trading stocks. It's very similar, but you can also day trade cattle prices, commodities, gold, silver. You can trade currencies similar to Forex as long as it's USDT backed, or as long as it's US dollar backed, you can trade currency. But yeah, there's just a massive difference between that and options, just a big difference there. One contract of the E-mini is about $4,000. And again, if you want to try out BAR, just sign up. I mean, I'm pretty sure it's open to everybody now. It's been out for like a month or so. Yeah, again, you got to manage risk. And again, the funded account programs, like people get hate. And again, I am sponsored by them. So I'm naturally, again, biased in their favor, of course. But it's just less risk in the beginning. Like if you want to try out futures, get your feet wet, have some pressure, but not the full extent of trading a full-on live account where you could lose thousands, try out a funded account program. The base one, 130 something. If you use my link, it's 130 something bucks a month. And, it's cheap. If you lose, it's not the end of the world. If you're good enough to pass it, you get 90% split once you're funded. And so it's just a good middle ground for traders who might not be ready to risk 20, 30 grand or whatever it is, but also don't just want to basically paper trade. Just, it's kind of a good middle ground. You can check out the link in the description if you're interested. But again, I am biased in their favor. I always try to kind of spam that because it's true. I try to be as transparent as I can. So naturally, I'm biased in their favor. They pay me money. So, yeah. Yeah, and I've been trading futures today. You can see just today alone, I've been trading mostly the regular E-mini, which will go pretty quickly, but you can see in the combine, I'm up about 387 here. But again, my TOS account's got about, got about 40,000 in it right now. I get about 140, 160,000 in buying power. Fluctuates. And so I'm in a really advantageous position where I don't necessarily need to get funded per se. But, again, a lot of people aren't in that situation. All right, but look at Microsoft starting to pump up. It's at 289s here. Google at 108.40s. So we'll see if it holds. Thoughts on FRC? Dumpster fire right now. What I'll call FRC right now is impactful because the whole market's looking at it to determine bank weakness or strength. And so it's just kind of a chaotic stock right now that everybody's watching, 840s right now. We'll see what it does. All right, so the Google earnings call is live right now. Again, we're waiting for Microsoft, which is in about 30 minutes. Give your boy a follow on Twitter as well. At Beginner Trades is my Twitter handle. Again, at Beginner Trades is my Twitter handle. So if you haven't already, give your boy a follow. We appreciate it. I'll put the Twitter link up right here if you want to see it. We're growing our Twitter. We're over 3,000 Twitter followers now. Trying to get up to that 10K level is really what I want to get to. Yeah, I mean, we definitely needed this Beatrice. So we definitely needed green action because, again, FRC tanked the market. Again, bank fears. Everybody's scared of banks right now. So FRC absolutely destroyed the market today. The SPY went from, FRC dropped about 50% in the last 24 hours. The SPY went from basically 410s, 411s to 406. Right before the close, it hit 406. We're now all the way back up to 408s, looking a little bit more reasonable. Still a red day, but certainly not as bad as it would have been if these earnings didn't come in well, Hey, thanks, man. Thanks, Pawn. Appreciate it, bro. But yeah. Let me ask Bard to do something here on TOS. See if I can get Bard to give me a. Let me ask Bard. I think so. TOS is Pine or no? TOS is Think Script. All right, so let's ask it to do some stuff here. Write me a Think Script code that identifies. So you got to use coding language. Identifies on the chart in true overlay every time the symbol has hit the VWAP previously in a specific day. See what it gives me here. So this is Bard right here. So this is all right. So here it is. It gets some variables that are defined here. I don't know Think Script. So it created a loop. Let's see if it works. All right, let's try it. TOS script is Think Script, right? Think Script. Okay. Yeah, that's right. It looks like it's commenting out. Let me ask it, can you remove the comment slashes? Okay, yeah, there you go. All right, so here we go. This is better. There we go. All right, let's try it. Yeah, I was gonna say, like, it's commenting out everything. I don't want it to do that. Let's tell it the code problem and see if it answers it. Also remove plot data like this, but it looks like it's for whatever. I don't know how they do loops here. Like I know I'm a JavaScript programmer, so like my loops look like this. And this is different. This looks more kind of like a Python like program code or whatever. No, we won't save it. So we'll have to work with it. Google pop it up a little bit. Microsoft at 289s here. Bitcoin loved today. It's up to 28,000. Basically, it was looking pretty weak too. The only problem is like FRC is starting to dip down a little bit. FRC is down to 830s right now. Yeah, we'll stream the whole live stream right here. The reports are already out. We'll stream the entire earnings report live when it drops here. All right, so yeah, the full call will be streamed live in about 23 minutes. Yeah, FRC started to fall back down though. It's at 830s right now, so it's at 830s. Yeah, we'll see. Yeah, I'm gonna go ahead and switch my headphones out. I like AirPods, but I generally like I like to use these. So y'all can hear the audio, correct? You should be able to. All right, so again, the earnings report drops in a couple minutes now. We still got about 20 minutes here. For integer I equals 0. So I see a for loop right there. Looks like JavaScript to me. That's what my JavaScript looks. So you start at 0 if I is less than 5. You multiply I times itself. System printout I. What do you mean? What are you trying to write there, bro? FRC price target $3 per share. Morningstar. What's up, Snow? We're not going to stream the earnings call for Google because, again, we're not going to be able to stream both of them, and I don't think it's going to be helpful if we start Google's earnings call and then start it mid call and then pivot to Microsoft. I'd rather just kind of keep it like this. SPY's still pumping up a little bit, though. The market's starting to bounce back some over the last couple minutes here. That's nice to see. Yeah, it's all good, Zahid. All right, so looking at our poll here, we're going to do another vote right now. The vote's going to be... The vote is going to be, does Microsoft close above 287 today? Microsoft closed above 287 today. Vote on the poll. Let us know what you guys think. Yeah, you can listen to it here, AK. We're going to stream the whole thing live. Yeah, didn't CMG have earnings? All right, so we're gonna give you kind of the updates here. So Bed Bath & Beyond gets NASDAQ delisting notice. So Bed Bath & Beyond has gotten a NASDAQ delisting notice. Visa CEO says consumer payments remain a massive opportunity, and there's still a tremendous amount of cash and checks spent globally with a very long runway for growth. FRC is expected to be seized by the government, according to Fox. Wow. So FRC is expected to be seized by the government. Wow. If that's true, that's huge news. Again, we're just speculating here. Yeah, that's crazy. Yeah, so FRC expected to be seized by the government, according to Fox. Again, all right, guys. So, I don't know if that's true or not. Again, we'll see if it's true. I don't know. But if it is true, that's crazy news. FRC hasn't really moved much. Again, I don't know if it's true or not. But, again, Google up big still. Microsoft up pretty big. Yeah, another one of my sponsors, guys, is a company called Chart Prime. And Chart Prime is actually a really cool service. So we got about 15 minutes. And so I might as well sell out a little bit and do a sponsored post here. But no, Chart Prime is actually really, really cool. Again, it's a trading view indicator service, so like you'll see me use it a lot with like crypto and stocks. Um, you can use them at any time frame in stocks, crypto, forex, futures. I use them a ton in futures, but you can see they give you these reversal signals. They give you candlestick patterns, and like look how, again, I can't guarantee you're going to make money. They're a sponsor of mine. I'm certainly biased in their favor because they pay me money. But like, look at this reversal down, nice drops. Reversal down, nice drops, and every candle here represents an hour. So this is over like literal days. If you keep scrolling back here, you can also look at like candlestick momentums, and like candlestick patterns low key work really well on candlesticks. Like look at the bearish engulfing candle drop over the entire day. And so they can be powerful, but that's a longer term time frame for like swing trading. You can also use them on a 1 minute time frame here as well. And again, Chart Prime, you know, again, you can use it in stocks, crypto, forex, futures. Look at this thing literally calling the very top of this price action. So again, it caught it here, and then look at the drops you get over like 20-30 minute period. And then it literally calls the bottom here and bounces back up too. And so again, it's called Chart Prime. It's a trading view indicator service. I use it a ton. Look, possible reversal up, bounce. Possible reversal up, big bounce. Possible reversal down, drop. Possible reversal down, drop. You know, and again, I can keep going back here, but you can use it in anything. Crypto, a lot of people use it in crypto. But they are a sponsor. Again, I'm biased in their favor, but it's pretty cool. I've been using them for a couple months now. There's the link right there if you want to check it out. Bed Bath and Beyond, does that mean they're done for? So a NASDAQ delisting listing notice generally is gets followed. Generally what happens afterwards is that they're going to split the stock up. Or they're going to do what's called a reverse split, which means they're going to consolidate shares, try to pump the price of the stock up a little bit more. I have no idea. Ken says, John, you see Amazon ran from 114 to 149 in July. Do you think PE will prevent that from happening again? Thanks, man. You're the top 3. That's why I ask. Hey, thanks, man. Again, I have no idea, dude. I don't know what's going to happen with Amazon. For me personally, it's just about probabilities. But I can't say for sure what they're going to do or anything like that. Again, I really just don't know. I think PE is kind of high, but it's still Amazon. So it's like the 3rd largest company in the world. Very, very heavily used company, of course. Certainly has a utility argument. But again, I don't know. I don't know what they're going to do, bro. Good luck, man. Why is he saying Microsoft and Google are up? They are down. What? I'm saying Microsoft and Google are up because they're up. Again, they're up on every possible basis you could imagine here today. Again, you look at the previous closing price, which is probably where a lot of people are going to look at it. The previous closing price is down here. And so Google, green on the day relative to the previous closing price, which is, again, the most accurate way to look at whether something's up or down. Microsoft, previous closing price is way down there. And so, yes, they are up. Google is up relative to where it was yesterday. And, I mean, especially in earnings, they're definitely up if we're just taking into account earnings. Yeah, all good, Grant. I'm just messing with you a little bit, dude. It's all right. Stop loss. Good luck, man. All right, guys. So again, 14 minutes, guys. 14 minutes. We're gonna cover the full earnings call for Microsoft. Bed Bath & Beyond breaking lows here. FRC at right around 836s. Funny how people ask you if the market's going up, down. Yeah, I really have no idea. I try to be honest with them. You know, I try to be honest with them, but again, I really don't know. All right, guys. So yeah, FRC down. Huge, massive down drop today. All right, guys. So at 108.60s right now, Microsoft at 288.50s here. All right, guys. So, I got no qualms against you. Plug and Chart Prime. I think they're actually pretty good. Yeah, I think they're pretty solid. I mean, $35. I mean, is this gambling? It depends on your definition. I mean, if your definition is risking, I mean, number one, it could be interpreted as gambling regardless of the definition. You know, it depends on whether you consider your definition of gambling risking money with unfavorable odds. Then it depends on whether you're actually good enough. If your definition of gambling is just risking money, then it certainly is. But I mean, then such is life, you know. Life is risking things, and you know, but again, it depends. Trading is, I always correlate trading to poker, because poker, calculating pot odds is very similar to calculating your risk reward ratio, and trading variance plays a key factor in both. Although over the long run, if you're good at one of those things, then generally over the long run, your edge will show up. Same thing with trading. But I will say, like, the more you zoom out in trading, the easier it becomes. Like, long-term value investing is one of the most effective ways of making money. I'll put it this way. Long-term investing is the most effective way of making money in the financial markets by far. You know, again, value investing, researching healthy blue chip, low PE companies, buying and sitting on them for years and making your percentages every year is one of the most effective ways to make money as a whole. It's one of the most effective ways to hedge inflation. And if you do it correctly and diversify well enough into blue chip healthy companies, you're almost guaranteed to make money over the long run. Sure, you might have some companies that fail. You might have some companies that don't do too hot. But regardless of those, you're still going to make money over 5 to 10 years. Of course, the whole point is to keep up with inflation. Day trading can be powerful as well, although much less people are good at it and actually make money doing it. But, you know, again, it has a larger ceiling, I guess I should say. But yeah, it depends. All right, guys, 9 minutes here, 9 minutes. Did you just call me an investment, bro? An investment, bro. How dare you, sir? The audacity of you, man. An investment, bro? Come on now, dude. Listen, I day trade, I swing trade, I invest. Look at my day trading today, man. You know, again, this is my graph today, day trading, bro. Again, I don't think, like, if you want to go Bloods, Crips with it, I don't think you should restrict yourself to just one type of trading. It's not like I hate, swing traders. You know, it's not like I hate investors. It's not like you only can like one and you have to hate the other one. You know, like in the end, I do a little bit of everything. I swing trade, I day trade, I invest, and honestly, that's my favorite way to do it. It's the most freedom of trading. Like, I could buy up an extended dip stock, and if it goes in my favor in 20 minutes, if it goes up 20% in 20 minutes, I'm taking profit. That'll be a day trade. If it takes a lot longer, if it goes in my favor 3 months later, I can sell it and still make money doing it. And so the freedom to be able to do that is something that's honestly really helpful for trading profit. Being restricted by the PDT rule and other stuff certainly doesn't help trading. Bed Bath & Beyond, I think, just broke lows down to under $15, down to 14.5 cents. Yeah. I mean, Microsoft did great. So did Google. Again, we got 8 minutes here until the numbers come out. Yeah, guidance is probably the single most important metric if they put out there. Because, again, like, EPS and sales and stuff are historical metrics. So they are looking at history of how the stock performed. What's more important than that is future. What happens in the future. Past has already happened with regards to stocks. Guidance, because of that, is one of the more important metrics because it's looking at the future projections that the company thinks it will hit or miss or whatever. So learn how to be the house. Yeah. Diversification is generally the right move. Um, in everything. Like diversification is always a good thing. I mean, you can master specific things, and I know that concept is like taken off over the last couple years, but like backup plans are always helpful. I have ADHD, and so I'm going from like all these different interests regularly. Like at this point in time, I've got my real estate license. I run a stock market based YouTube channel. I trade stocks. I know how to program and do software development with like mobile development. Um, you know, and so at this point in time, we're diversified with regards to income streams. And I think that's a huge factor in wealth building over time is just diversifying your income streams. So diversify, guys, especially long-term investing. Bed Bath and Beyond's down to 13 and a half cents. 13 and a half cents. Down to 13 cents. Just hit 12 and a half cents, guys. Bed Bath and Beyond is a dumpster fire right now. This is like the seventh time I've said dumpster fire, but it really is. Look at this thing. Down to 12 cents, guys. Bed Bath and Beyond dumping down. We posted like 10 minutes ago that FRC was probably going to get seized by the government, I think. First Republic stock in free fall, 10 billion in deposits withdrawn, asset sales looming. FRC is about to go down, guys. We'll see how this affects everything else down to, or no, this is Bed Bath & Beyond, I'm sorry. Bed Bath & Beyond bankruptcy notice, NASDAQ delisting notice, cancel special meeting of shareholders. Literal dumpster fire, guys. All right, 5 minutes before the Microsoft earnings report. Or until the Microsoft earnings call, that is. Yeah, this is third quarter, right? Yep. All right, guys. We are getting ready to stream the earnings call. Bear with me here. I'm going to mute the music. Y'all can hear the music, correct? Bear with me. Yeah, for sure. Night 75. All right, again, Bed Bath & Beyond dumpster fire on the way down here, down to 12 cents, hit 11 and a half cents. At this point in time, we got about 3 minutes before the Microsoft earnings call. We are waiting for it to start. Uh, patiently waiting for this to start, guys. Terrible hold music. I'm always kind of ranking this hold music. This is probably the worst. All right, so it's starting to pop back up to 13 cents here. Microsoft on the right. All right, guys, 2 minutes. Bed Bath and Beyond falling down crazy big. Yeah, look at Bed Bath, guys, down to 12 cents. I tried telling people, bro, the argument is simple. In what way is Bed Bath and Beyond? I've been saying this for weeks now. I get a lot of people popping this in my morning live streams. I've been saying this for weeks now. In what way Does Bed Bath and Beyond, outside of crazy meme stock squeeze potential, like they're going to argue, in what way does Bed Bath and Beyond actually succeed long term fundamentally? And I have not got. I've asked this question at least 5 to 10 times. I have not gotten one reasonable thesis on why they will succeed. You know why? Is because nobody actually believes that they're going to. Amazon has replaced needing to drive to Bed Bath and Beyond, especially with how efficient their shipping is. You don't need to go to Bed Bath and Beyond to buy flip flops. I don't need to buy pillows from Bed Bath and Beyond anymore. I don't need to go there and buy pillowcases. I can buy them on Amazon and get them at my door the next day. And so that's bad for Bed Bath and Beyond. Nobody's giving me a reasonable argument, and ultimately, again, there's not really any fundamental argument for this. It's just a lot of people who are pumping it up are stuck from much higher prices. So y'all just be careful. That's Bard. Yeah. All right, guys. Should be starting pretty soon. All right, y'all can hear the music, correct? Prior to this, right? Relax. Oh, I'm relaxed. I'm just kind of hyping the stream up. You know how I do. Sometimes I go a little overboard. It's all right. Uh, I'm sure my family kind of hears me yelling in the background. They're like, "Man, John, shut up, dude." Bed Bath& and Beyond at 13 cents. We're waiting for the call to start, guys. My wife forces me to go there sometimes, but nobody's ever there. I still haven't started it up yet, guys. Waiting. We're hitting live. Yeah, we're live here. Waiting for the start. Yeah, we're muted right now because we're waiting for this to start because they're playing potentially copyright hold music. So I'm just not going to play it until they start the earnings call, and then we'll put everything up on screen and let people hear it. Um,
Microsoft
sound check.
fiscal year
Sound check.
2023 third quarter earnings conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. As a reminder, this conference is being recorded. I would now like to turn the conference over to your host, Brett Iverson, Vice President of Investor Relations.
Sound
Please
check.
go ahead.
Sound good. Sound good, guys.
Good afternoon, and thank you for joining us today. On the call with me are Satya Nadella, Chairman and Chief Executive Officer, Amy Hood, Chief Financial Officer, Alice Jalla, Chief Accounting Officer, and Keith Oliver, Deputy General Counsel. On the Microsoft Investor Relations website, you can find our earnings press release and financial summary slide deck, which is intended to supplement our prepared remarks during today's call and provides the reconciliation of differences between GAAP and non-GAAP financial measures. Additionally, new this quarter, more detailed Outlook slides will be available on the Microsoft Investor Relations website when we provide Outlook commentary on today's call. On this call, we will discuss certain non-GAAP items. The non-GAAP financial measures provided should not be considered as a substitute for or superior to the measures of financial performance prepared in accordance with GAAP. They're included as additional clarifying items to aid investors in further understanding the company's third quarter performance, in addition to the impact these items and events have on the financial results. All growth comparisons we make on the call today relate to the corresponding period of last year unless otherwise noted. We will also provide growth rates in constant currency when available as a framework for assessing how our underlying businesses performed, excluding the effect of foreign currency rate fluctuations. Where growth rates are the same in constant currency, we will refer to the growth rate only. We will post our prepared remarks to our website immediately following the call until the complete transcript is available. Today's call is being webcast live and recorded. If you ask a question, it will be included in our live transmission, in the transcript, and in any future use of the recording. You can replay the call and view the transcript on the Microsoft Investor Relations website. During this call, we will be making forward-looking statements, which are predictions, projections, or other statements about future events. These statements are based on current expectations and assumptions that are subject to risks and uncertainties. Actual results could materially differ because of factors discussed in today's earnings press release, in the comments made during this conference call, and in the risk factors section of our Form 10-K, Forms 10-Q, and other reports and filings with the Securities and Exchange Commission. We do not undertake any duty to update any forward-looking statement. And with that, I'll turn the call over to Satya.
Thank you very much, Brett. The Microsoft Cloud delivered over $28 billion in quarterly revenue, up 22% and 25% in constant currency, demonstrating our continued leadership across the tech stack. We continue to focus on three priorities. First, helping customers use the breadth and depth of the Microsoft Cloud to get the most value out of their digital spend. Second, investing to lead in the new AI wave across our solution areas and expanding our TAM. And third, driving operating leverage, aligning our cost structure with our revenue growth. Now I'll highlight examples of our progress, starting with infrastructure. Azure took share as customers continue to choose our ubiquitous computing fabric from cloud to edge, especially as every application becomes AI-powered. We have the most powerful AI infrastructure and is being used by our partner OpenAI, as well as NVIDIA and leading AI startups like Adapt and Inflection to train large models. Our Azure OpenAI service brings together advanced models, including ChatGPT and GPT-4, with the enterprise capabilities of Azure. From Coursera and Grammarly to Mercedes-Benz and Shell, we now have more than 2,500 Azure OpenAI service customers, up 10x quarter over quarter. Just last week, Epic Systems shared that it was using Azure OpenAI service to integrate this next generation of AI with its industry-leading EHR software. Azure also powers OpenAI API, and we are pleased to see brands like Shopify and Snap use the API to integrate OpenAI's models. More broadly, we continue to see the world's largest enterprises migrate key workloads to our cloud. Unilever, for example, went all in on Azure this quarter in one of the largest ever cloud migrations in the consumer goods industry. IKEA Retail, ING Bank, Robobank, Telstra, and Wolverine Worldwide all use Azure Arc to run Azure services across on-premise, edge, and multi-cloud environments. We now have more than 15,000 Azure Arc customers, up over 150% year over year. And we are extending our infrastructure to 5G network edge with Azure for Operators. We are the cloud of choice for telcos, and at MWC last month, AT&T, Deutsche Telekom, Singtel, and Telefonica all shared how they are using our infrastructure to modernize and monetize their networks. Now, onto data. Our intelligent data platform brings together databases, analytics, and governance so organizations can spend more time creating value and less time integrating their data estate. Cosmos DB is the go-to database powering the world's most demanding workloads at any scale. OpenAI relies on Cosmos DB to dynamically scale their ChatGPT service, one of the fastest growing consumer apps ever, enabling high reliability and low maintenance. The NBA uses Cosmos DB to ingest more than 10 million data points per game, helping teams optimize their gameplay. And we are taking share with our analytics solutions. Companies like BP, Canadian Tire, Marks & Spencer, and T-Mobile all rely on our end-to-end analytics to improve speed to insight. Now on to developers. From Visual Studio to GitHub, we have the most popular tools to help every developer go from idea to code and code to cloud, all while staying in their flow. Today, 76% of the Fortune 500 use GitHub to build, ship, and maintain software. And with GitHub Copilot, the first at-scale AI developer tool, we're fundamentally transforming the productivity of every developer from novices to experts. In 3 months, Since we made Copilot for Business broadly available, over 10,000 organizations have signed up, including the likes of Coca-Cola and GM, as well as Duolingo and Mercado Libre, all of which credit Copilot with increasing the speed for their developers. We're also bringing next-generation AI to Power Platform so anyone can automate workflows, create apps or web pages, build virtual agents, and analyze data using only natural language. More than 36,000 organizations have already used existing AI-powered capabilities in Power Platform, and with our new Copilot in Power Apps, we're extending these capabilities to end users who can interact with any app through conversation instead of clicks. All up, we now have nearly 33 million monthly active users of Power Platform, up nearly 50% year over year. Now on to business applications. From customer experience and service to finance and supply chain, we continue to take share across all categories we serve as organizations like Asahi, C.H. Robinson, Eon, Franklin Templeton choose our AI-powered business applications to automate, simulate, and predict every business process and function. And we are going further with Dynamics 365 Copilot, which works across CRM and ERP systems to bring the next generation of AI to employees in every job function, reducing burdensome tasks like manual data entry, content generation, and note-taking. Now on to our industry and cross-industry solutions. Our Cloud for Sustainability is seeing strong adoption from companies in every industry, including BBC, Nissan, and TCL, as they deliver on their respective environmental commitments. Our Cloud for Healthcare was front and center at HIMSS last week as we expanded our offerings for payers and added new AI-powered capabilities for providers. We showcased the first fully AI-automated clinical documentation application, Nuance DAX Express, which will bring GPT-4 to more than 550,000 existing users of Dragon Medical. And at Hanover Manufacturing Trade Show, Siemens shared how it will use a Teams app integrated with Azure OpenAI Service to optimize factory workflows. Now on to future of work. Microsoft 365 Copilot combines next-generation AI with business data in the Microsoft Graph and Microsoft 365 applications, removing the drudgery and unleashing the creativity of work. Copilot works alongside users embedded in the Microsoft 365 applications millions use every day, and it also powers business chat, which uses natural language to surface information and insights based on business content and context. We've been encouraged by early feedback and look forward to bringing these experiences to more users in the coming months. Teams usage is at an all-time high and surpassed 300 million monthly active users this quarter, and we once again took share across every category, from collaboration to chat to meetings to calling, as we add value for existing customers and win new ones like ABN AMRO, Jaguar Land Rover, Mattress Firm, Unisys, and Vodafone. We announced a new version of Teams that delivers up to 2 times faster performance while using 50% less memory so customers can collaborate more efficiently and prepare for experiences like Copilot. Teams is also expanding our TAM. Nearly 60% of our enterprise Teams customers buy Teams Phone, Rooms, or Premium. Teams Phone is the undisputed market leader in cloud calling, helping our customers reduce costs with a 3-year ROI of over 140%. Teams Rooms revenue more than doubled year over year, and Teams Premium meets enterprise demand for AI-powered features like intelligent recaps, now generally available. It's one of our fastest growing modern work products ever, with thousands of paid customers just 2 months in. With Microsoft Viva, we have created a completely new suite for employee experience. Viva brings together goals, communications, learning, workplace analytics, and employee feedback. Across industries, companies like Dell, MasterCard, and SES are using Viva to help their employees thrive. Just last week, we announced Copilot for Viva, offering leaders a new way to build high-performance teams by prioritizing both productivity and employee engagement. And with Viva Sales, we've extended the platform to specific job functions, helping sellers apply large language models to their CRM and Microsoft 365 data so that they can automatically generate content like customer mail. All this innovation is driving growth across Microsoft 365. Ferrovial, Goldman Sachs, Novo Nordisk, and Rogers all chose E5 to empower their employees with our best-in-class productivity apps, along with advanced security, compliance, voice, and analytics. Now on to Windows. While the PC market continues to face headwinds, we again saw record monthly active Windows devices and higher usage compared to pre-pandemic. We're also seeing accelerated growth in Windows 11 commercial deployments. Over 90% of the Fortune 500 are currently trialing or have deployed Windows 11. And with Windows 365 and Azure Virtual Desktop, we continue to transform how employees at companies like Mazda and Nationwide access Windows. All up, over 1/3 of our enterprise customer base has purchased cloud-delivered Windows to date. And new Windows 365 Frontline extends the power and security of cloud PCs to shift workers for the first time. Now on to security. Our comprehensive AI-powered solutions spanning all clouds and all platforms give the agility advantage back to defenders. Among analysts, we are the leader in more categories than any other provider, and we once again took share across all major categories we serve. And we continue to introduce new products and functionality to further protect customers. With Security Copilot, we are combining large language models with a domain-specific model informed by our threat intelligence and 65 trillion daily security signals to transform every aspect of the SOC productivity. And we also added new governance controls and policy protections to better secure identities along with resources they access. Nearly 720,000 organizations now use Azure Active Directory, up 33% year over year. And all up, nearly 600,000 customers now have 4 or more security workloads, up 35% year over year, underscoring our end-to-end differentiation. EY and Qualcomm, for example, both chose our full security stack to ensure the highest levels of protection and visibility across their organizations. Now on to LinkedIn. We once again saw record engagement as more than 930 million members turned to the professional social network to connect, learn, sell, and get hired. Member growth accelerated for the 7th consecutive quarter as we expanded to new audiences. We now have 100 million members in India, up 19%. And as Gen Z enters the workforce, we saw a 73% year-over-year increase in the number of student signups. In this persistently tight labor market, LinkedIn Talent Solutions continues to help hirers connect to job seekers and professionals to build the skills they need to access opportunity. Our hiring business took share for the 3rd consecutive quarter. The excitement around AI is creating new opportunities across every function, from marketing, sales, and finance to software development and security. LinkedIn is increasingly where people are going to learn, discuss, and up-level their skills with more than 100 AI courses. And we've introduced new AI-powered features, including writing suggestions for member profiles and job descriptions and collaborative articles. Finally, LinkedIn Marketing Solutions continues to be a leader in B2B digital advertising, helping companies deliver the right message to the right audience on a safe, trusted platform. More broadly, we continue to expand our opportunity in advertising. Our exclusive partnership with Netflix brings differentiated premium video content to our ad network, and our new Copilot for the web is reshaping daily search and web habits. 2 months since the launch of new Bing and Edge, we are very encouraged by user feedback and usage patterns. All up, Bing has more than 100 million daily active users. We're winning new customers on Windows and mobile. Daily installs of the Bing mobile app have grown 4x since launch. We are making progress in share gains. Edge took share for the 8th consecutive quarter, and Bing once again grew share in the United States. We continue to innovate with first-of-their-kind AI-powered features, including the ability to set the tone of chat and create images from text prompts powered by DALL-E. Over 200 million images have been created to date, and we see that when people use these new AI features, their engagement with Bing and Edge goes up. As we look towards a future where chat becomes a new way for people to seek information, consumers have real choice in business model and modalities with Azure-powered chat entry points across Bing, Edge, Windows, and OpenAI's ChatGPT. We look forward to continuing this journey in what is a generational shift in the largest software category, search. Now on to gaming. We're rapidly executing on our ambition to be the first choice for people to play great games whenever, however, and wherever they want. We set third quarter records for monthly active users and monthly active devices. Across our content and services business, we're delivering on our commitment to offer gamers more ways to experience the games they love. Our revenue from subscriptions reached nearly $1 billion this quarter. This quarter, we also brought PC Game Pass to 40 new countries, nearly doubling the number of markets we are available. Great content remains the flywheel behind our growth. We have now surpassed 500 million lifetime unique users across our first-party titles and have never been more excited about our pipeline of games, including the fourth quarter launches of Minecraft Legends and Redfall. In closing, we are focused on continuing to raise the bar on our operational excellence and performance as we innovate to help our customers maximize the value of their existing technology investments and thrive in the new era of AI. In a few weeks' time, we'll hold our Build conference, where we will share how we are building the most powerful AI platform for developers, and I encourage you to tune in. I could not be more energized about the opportunities ahead, and with that, let me turn it over to Amy.
Thank you, Satya, and good afternoon, everyone. Our third quarter revenue was $52.9 billion, up 7% and 10% in constant currency. Earnings per share was $2.45, and increased 10% and 14% in constant currency. Our results exceeded expectations, driven by focused execution from our sales teams and partners. In our commercial business, revenue was up 19% in constant currency. We saw better than expected renewal strength, including across Microsoft 365, which also benefited Windows Commercial, given the higher in-period revenue recognition. In Office 365 standalone products, we saw improvement in new business growth, while growth trends in EMS and Windows Commercial standalone products remain consistent with Q2. In Azure, customers continued to exercise some caution as optimization and new workload trends from the prior quarter continued as expected. In our consumer business, PC demand was a bit better than we expected, particularly in the commercial segment, which benefited Windows OEM and Surface, even as channel inventory levels remain elevated, which negatively impacted results. Advertising spend landed in line with our expectations. We have seen share gains in Azure, Dynamics, Teams, Security, Edge, and Bing, as we continue to focus on delivering high value, as well as new innovative solutions to our customers, including next-generation AI capabilities. Commercial bookings increased 11% and 12% in constant currency on a strong prior year comparable, with a declining expiry base and 3 points of unfavorable impact from the inclusion of Nuance in the prior year. The better-than-expected result was driven by strong execution across our renewal sales motions mentioned earlier. Commercial remaining performance obligation increased 26% to $196 billion. Roughly 45% will be recognized in revenue in the next 12 months, up 18% year over year. The remaining portion, which we recognize beyond the next 12 months, increased 34%. And this quarter, our annuity mix was again 96%. FX impact on total company revenue, segment level revenue, and operating expense growth was as expected. FX decreased COGS growth by 2 points, 1 point favorable to expectations. Microsoft Cloud revenue was $28.5 billion and grew 22% and 25% in constant currency, slightly ahead of expectations. Microsoft Cloud gross margin percentage increased roughly 2 points year over year to 72%, a point ahead of expectations, driven by cloud engineering efficiencies. Excluding the impact of the change in accounting estimate for useful lives, Microsoft Cloud gross margin percentage decreased slightly, driven by lower Azure margin. Company gross margin dollars increased 9% and 13% in constant currency, including 2 points due to the change in accounting estimate. Gross margin percentage increased year over year to 69%. Excluding the impact of the change in accounting estimate, gross margin percentage decreased slightly, driven by a lower mix of OEM revenue. Operating expense increased 7% and 9% in constant currency, about $300 million lower than expected. Operating expense growth was driven by roughly 2 points from the Nuance and Xandr acquisitions, as well as investments in cloud engineering and LinkedIn. At a total company level, headcount at the end of March was 9% higher than a year ago. Operating income increased 10% and 15% in constant currency, including 4 points due to the change in accounting estimate. Operating margins increased roughly 1 point year-over-year to 42%. Excluding the impact of the change in accounting estimate, operating margins decreased slightly and increased slightly in constant currency. Now to our segment results. Revenue from productivity and business processes was $17.5 billion and grew 11% and 15% in constant currency, ahead of expectations, primarily driven by better than expected results in Office Commercial. Office Commercial revenue grew 13% and 17% in constant currency. Office 365 commercial revenue increased 14% and 18% in constant currency, slightly better than expected, with the strong renewal execution mentioned earlier and E5 momentum. Paid Office 365 commercial seats grew 11% year-over-year to over 382 million, with installed base expansion across all workloads and customer segments. Seat growth was again driven by our small and medium business and frontline worker offerings. Office Commercial licensing declined 1% and increased 5% in constant currency, better than expected, with 11 points of benefit from transactional strength in Japan. Office Consumer revenue increased 1% and 4% in constant currency, with continued momentum in Microsoft 365 subscriptions, which grew 12% to 65.4 million. LinkedIn revenue increased 8% and 10% in constant currency, driven by growth in talent solutions. Dynamics revenue grew 17% and 21% in constant currency, driven by Dynamics 365, which grew 25% and 29% in constant currency, with healthy growth across all workloads. Segment gross margin dollars increased 14% and 18% in constant currency, and gross margin percentage increased roughly 2 points year-over-year. Including the impact of the change in accounting estimate, gross margin percentage increased slightly, driven by improvements in Office 365, partially offset by sales mix shift to cloud offerings. Operating expenses increased 4% and 5% in constant currency, and operating income increased 20% and 27% in constant currency, including 4 points due to the change in accounting estimate. Next, the Intelligent Cloud segment. Revenue was $22.1 billion, increasing 16% and 19% in constant currency, slightly ahead of expectations. Overall, server products and cloud services revenue increased 17% and 21% in constant currency. Azure and other cloud services revenue grew 27% and 31% in constant currency. In our per-user business, the enterprise mobility and security install base grew 15% to nearly 250 million seats. In our on-premises server business, revenue decreased 2% and was relatively unchanged in constant currency, with continued demand for our hybrid offerings, including Windows Server and SQL Server running in multi-cloud environments, offset by transactional licensing. Enterprise services revenue grew 6% and 9% in constant currency, with better than expected performance across enterprise support services and Microsoft consulting services. Segment gross margin dollars increased 15% and 18% in constant currency, and gross margin percentage decreased slightly. Excluding the impact of the change in accounting estimate, gross margin percentage declined roughly 3 points, driven by sales mix shift to Azure and the lower Azure margin noted earlier. Operating expenses increased 19% and 20% in constant currency, including roughly 3 points of impact from the Nuance acquisition. Operating income grew 13% and 17% in constant currency, with roughly 6 points from the change in accounting estimate. Now to more personal computing. Revenue was $13.3 billion, decreasing 9% and 7% in constant currency, with better than expected results across all businesses. Windows OEM revenue decreased 28% year-over-year, and devices revenue decreased 30% and 26% in constant currency, both ahead of expectations. We saw better than expected PC demand, as noted earlier, particularly in the commercial segment, which has higher revenue per license. Although results continue to be negatively impacted by elevated channel inventory levels. Windows commercial products and cloud services revenue increased 14% and 18% in constant currency, significantly ahead of expectations, primarily due to the strong renewal execution with higher in-period revenue recognition noted earlier. Search and news advertising revenue ex-TAC increased 10% and 13% in constant currency, including 2 points from the Xandr acquisition. Results were driven by higher search volume, with share gains again this quarter for our Edge browser globally and Bing in the US. And in gaming, revenue declined 4% and 1% in constant currency, ahead of expectations. Xbox hardware revenue declined 30% and 28% in constant currency on a high prior year comparable that benefited from increased console supply. Xbox content and services revenue increased 3% and 5% in constant currency, driven by better than expected monetization in third-party and first-party content and growth in Xbox Game Pass. Segment gross margin dollars declined 9% and 5% in constant currency, and gross margin percentage increased slightly year over year. Operating expenses declined 5% and 3% in constant currency, even with 3 points of growth from the Xandr acquisition. Operating income decreased 12% and 7% in constant currency. Now, back to total company results. Capital expenditures, including finance leases, were $7.8 billion to support cloud demand. Cash paid for PP&E was $6.6 billion. Cash flow from operations was $24.4 billion, down 4% year over year, as strong cloud billings and collections, as well as lower supplier payments, were more than offset by a tax payment related to the R&D capitalization provision and employee payments primarily related to headcount growth and an increase in employee compensation. Free cash flow was $17.8 billion, down 11% year over year. Excluding the impact of this tax payment, cash flow from operations increased 1% and free cash flow declined 5%. This quarter, other income and expense was $321 million, higher than anticipated, driven by net gains on foreign currency remeasurement. Our effective tax rate was approximately 19%. And finally, we returned $9.7 billion to shareholders through share repurchases and dividends. Now, moving to our Q4 outlook, which, unless specifically noted otherwise, is on a U.S. dollar basis. My commentary for the next quarter in FY24 does not include any impact from Activision, as we continue to work toward closing in fiscal year 2023, subject to obtaining required regulatory approvals. Now to FX. Based on current rates, we expect FX to decrease total revenue growth by approximately 2 points, with no impact to COGS or operating expense growth. Within segments, we anticipate roughly 2 points of negative FX impact on revenue growth in productivity and business processes and intelligent cloud, and roughly 1 point in more personal computing. Overall, our outlook has many of the trends we saw in Q3 continue through Q4. In our largest quarter of the year, we expect customer demand for our differentiated solutions, including our AI platform and consistent execution across the Microsoft Cloud, to drive another quarter of healthy revenue growth. Last year, we had our largest commercial bookings quarter ever, with a material volume of large multi-year commitments. On that comparable, we expect growth to be relatively flat. We expect consistent execution across our core annuity sales motions with strong renewals and continued commitments to our platform as we focus on meeting customers' changing contract needs, which include shorter-term, quick time-to-value contracts in this dynamic environment. Our key focus remains on delivering customer value. Microsoft Cloud gross margin percentage should be up roughly 2 points year over year, driven by the accounting estimate change noted earlier. Excluding that impact, Q4 cloud gross margin percentage will be relatively flat, as improvements in Office 365 will offset the lower Azure margin and the impact of scaling our AI infrastructure to meet growing demand. We expect capital expenditures to have a material sequential increase on a dollar basis, driven by investments in Azure AI infrastructure. Reminder, there can be normal quarterly spend variability in the timing of our cloud infrastructure build-out. Next, the segment guidance. In productivity and business processes, we expect revenue to grow between 10 and 12% in constant currency, or $17.9 to $18.2 billion US dollars. In Office Commercial, revenue growth will again be driven by Office 365, with seat growth across customer segments and ARPU growth through E5. We expect Office 365 revenue growth to be roughly 16% in constant currency. In our on-premises business, we expect revenue to decline in the low 30s. In Office Consumer, we expect revenue growth in the mid-single digits, driven by Microsoft 365 subscriptions. For LinkedIn, we expect mid-single-digit revenue growth, driven by Talent Solutions with continued strong engagement on the platform. And in Dynamics, we expect revenue growth in the mid to high teens, driven by continued growth in Dynamics 365. For Intelligent Cloud, we expect revenue to grow between 15 and 16% in constant currency, or $23.6 to $23.9 billion US dollars. Revenue will continue to be driven by Azure, which, as a reminder, can have quarterly variability primarily from our per-user business and from in-period revenue recognition, depending on the mix of contracts. In Azure, we expect revenue growth to be 26 to 27% in constant currency, including roughly 1 point from AI services. Growth continues to be driven by our Azure consumption business, and we expect the trends from Q3 to continue into Q4, as noted earlier. Our per-user business should continue to benefit from Microsoft 365 suite momentum, though we expect continued moderation in growth rates given the size of the installed base. In our on-premises server business, we expect revenue to decline low single digits as demand for our hybrid solutions, including Windows Server and SQL Server running in multi-cloud environments, will be more than offset by unfavorable FX impact. And in enterprise services, revenue should be relatively unchanged year over year as growth in enterprise support services will be offset by a decline in Microsoft consulting services. In more personal computing, we expect revenue of $13.35 to $13.75 billion US dollars. PC demand should be similar to Q3, and given channel inventory still remains elevated, our revenue will lag overall market growth as it continues to normalize. Therefore, Windows OEM and devices revenue should both decline in the low to mid-20s. In Windows commercial products and cloud services, revenue should decline low to mid-single digits. While we expect healthy annuity billings growth driven by continued customer demand for Microsoft 365 and our advanced security solutions, a reminder that our quarterly revenue growth can have variability primarily from in-period revenue recognition, depending on the mix of contracts. Search and news advertising ex-tech revenue growth should be approximately 10%, roughly 5 points higher than the overall search and news advertising revenue, driven by growth in first-party revenue, is similar to Q3. And in gaming, we expect revenue growth in the mid to high single digits. We expect Xbox content services revenue growth in the low to mid-teens, driven by third-party and first-party content, as well as Xbox Game Pass. Now back to company guidance. We expect COGS to grow between 3 and 4% in constant currency, or $16.8 to $17 billion US dollars, and operating expense to grow approximately 2% in constant currency, or $15.1 to $15.2 billion US dollars. Other income and expense to be roughly $300 million, as interest income is expected to more than offset interest expense. As a reminder, we are required to recognize mark-to-market gains or losses on our equity portfolio, which can increase quarterly volatility. We expect our Q4 effective tax rate to be in line with our full-year rate of approximately 19%. And finally, as a reminder for Q4 cash flow, we expect to make a $1.3 billion cash tax payment related to the R&D capitalization provision. Now, I'd like to share some closing thoughts as we look to the next fiscal year. With our leadership position as we begin this AI era, we remain focused on strategically managing the company to deliver differentiated customer value, as well as long-term financial growth and profitability. As with any significant platform shift, it starts with innovation. And we're excited about the early feedback and demand signal for the AI capabilities we have announced to date. We will continue to invest in our cloud infrastructure, particularly AI-related spend, as we scale with the growing demand driven by customer transformation. And we expect the resulting revenue to grow over time. As always, we remain committed to aligning cost and revenue growth to deliver disciplined profitability. Therefore, while the scaled CapEx investments will impact COGS growth, we expect FY24 operating expense growth to remain low. As a team, we have continually focused on pivoting our resources aggressively to the future as we execute at a high level in the moment to deliver value to our customers. That balance has enabled the company to successfully lead across a number of platform shifts over a number of decades. Therefore, we are committed to leading the AI platform wave and making the investments to support it. With that, let's go to Q&A. Brett?
Thanks, Amy. We'll now move over to Q&A. Out of respect for others on the call, we request that participants please only ask one question. Joe, can you please repeat your instructions?
Ladies and gentlemen, if you would like to ask a question, please press star 1 on your telephone keypad, and a confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Our first question comes from the line of Keith Weiss with Morgan Stanley. Please proceed.
Excellent. Thank you guys for taking the question, and congratulations on really a fantastic set of results and what we all know to be a still difficult environment out there. I think it really illustrates Microsoft's advantages in a lot of these technology innovations that you guys have been talking about. I wanted to ask you a question that I get probably more often than anything else, and one that I frankly don't have a good answer to, and that's around the OpenAI partnership. And particularly the accounting for that partnership. So I was hoping you could give us a little bit of color about how, whether or not revenues flowing from OpenAI into Microsoft on the CapEx side of the equation, whether there's any impact, just to give us a better understanding of how the accounting around that relationship is working.
Thanks, Keith. In some ways, let me start by saying it's a great partnership. We're proud to have worked together for a number of years, leading to some of the announcements that you've heard us make more recently. And we talked about the foundation of our partnership remains that when we both are successful, the other benefits. When we grow, it helps them, and when they grow, it helps us. But specifically to your question on how does it show up, it's easiest in this situation to think about them as like a customer of ours, like any other customer who would use the Azure infrastructure and our Azure AI services in service of supporting their end customers. And so when they do that, like any other customer who has a commercial relationship with us, we recognize revenue on that behalf. That's probably the simplest frame, Keith, that I hope is helpful.
Yeah, that's super helpful. I appreciate that.
Thanks, Keith. Joe, next question, please.
Our next question comes from the line of Mark Moerdler with Bernstein Research. Please proceed.
Congratulations on the quarter and the guidance, and thanks for taking my question. I'd like to drill into Azure and more specifically Azure IaaS PaaS consumption. IaaS PaaS consumption has really stepped down recently, and it's important to understand the macro versus macro and optimization that will rebound, whether it's going to rebound quickly, or is there a more fundamental issue? In other words, is this simply purely macro and everyone is stepping back a little bit and they're going to hit the pedal as soon as this comes back? Or is there something more fundamental that is driving corporate maybe to step back and that slowdown could sustain even when the IT spending rebounds? Thank you.
Thanks, Mark, for the question. Maybe I'll make 3 comments. And it's also important, I think, to distinguish between what I would say is macro or absolute performance and relative performance, because I think that's perhaps a good way to think about how we manage our business. First is optimizations do continue. In fact, we are focused on it. We incent our people to help our customers with optimization because we believe in the long run, that's the best way to secure the loyalty and long-term contracts with customers when they know that they can count on a cloud provider like us to help them continuously optimize their workload. That's sort of the fundamental benefit of public cloud, and we're taking every opportunity to prove that out with customers in real time. The second thing I'd say is we do have new workloads starting, because if you think about it, during the pandemic, it was all about new workloads and scaling workloads. But pre-pandemic, there was a balance between optimizations and new workloads. So what we're seeing now is the new workloads start, in addition to highly intense optimization rhythms that we have. The third is perhaps more of a relative statement. Because of some of the work we've done in AI, even in the last couple of quarters, we are now seeing conversations we never had, whether it's coming through even just OpenAI's APIs, right? If you think about the consumer tech companies that are all spinning essentially Azure meters, because they have gone to OpenAI and are using their API. These were not customers of Azure at all. Second, even Azure, the OpenAI API customers are all new, and the workload conversations, whether it's B2C conversations in financial services or drug discovery on another side, these are all new workloads that we really were not in the game in the past, whereas we now are. So those are the three comments I would make, both in terms of absolute macro, but more importantly, I think what is our relative market position and how it's being changed.
Mark, maybe the one thing I would add to those comments is, we've been through almost a year where that pivot that Satya talked about from we're starting tons of new workloads, we'll call that the pandemic time, to this transition post, and we're coming to really the anniversary of that starting. And so, to Satya's point, we're continuing to incent optimization, but at some point, workloads just can't be optimized much further. And when you start to anniversary that, you do see that it gets a little bit easier in terms of the comps year over year. And so you even see that in a little bit of our guidance, some of that impact from a year over year basis.
That was incredibly helpful. I really do appreciate it. Thank you for the color, and again, congratulations on what's happening.
Thanks, Mark. Joe, next question, please.
Our next question comes from the line of Brent Thill with Jefferies. Please proceed.
Thanks. On Copilot monetization, can you just give us a sense of how this shows up, where we're going to see it, and ultimately, is there a simple price lift that you think you can get through Copilot, say 10, 20, 30% above where you saw the regular components of the suite, or is it too hard to factor in? Thank you.
I mean, overall, we do plan to monetize a separate set of meters across all of the tech stack, whether they're consumption meters or per user subscriptions. The Copilot that's priced and it is there is GitHub Copilot. That's a good example of incrementally how we monetize. The price lists are there, out there, and others are to be priced because they're in preview mode. But you can expect us to do what we've done with GitHub Copilot pretty much across the board.
Yeah, Brent, the best way of thinking about this is when we believe we're adding a lot of value. And frankly, that's what the Copilots are doing, and some productivity improvement. You can expect that we will have a list price for those, and you'll be able to look at that as we get to release. And to Satya's point, GitHub Copilot is a great example.
Thanks.
Thanks, Brent. Joe, we have next question, please.
Our next question comes from the line of Raimo Lenschow with Barclays. Please proceed.
Hey, thank you. Congrats from me as well. Just staying on the AI theme and more thinking about the gross margin impact on Azure. Can you just, Satya, can you maybe talk a little bit about like how you see the cost of compute for AI workloads versus kind of the classic workloads, and how do you think that will evolve over time? Thank you.
Yeah, a couple of things. One is clearly the accelerated compute is what gets used to drive AI. And the thing that we are very, very focused on is to make sure but we get very efficient in the usage of those resources. If you think about sort of what a hyperscaler does, it's not just rack and stack sort of hardware. They use software to optimize the performance of a given workload, and in fact, heterogeneous workloads on a given set of hardware. And so we have many knobs that will continuously continue to drive optimization across it. And you see it even in the, for a given generation of a large model, where we start in terms of the cost footprint to where we end in the cost footprint, even in a period of a quarter changes. So you can expect us to do what we've done over the decade plus of the public cloud to bring the benefits of, I'd say, continuous optimization of our COGS to a diverse set of workloads. The other thing I'd mention is that there are a lot of workloads now. Like one of the reasons why why we got together with OpenAI primarily was we came at it and said this type of workload, whether it's a training or an inference workload, is going to be much more generally relevant for us, not just in the context of AI. And so you can see us apply it in other contexts as well.
And Rima, we talked a bit about this when we talked about the new Edge and the new Bing with analysts. And I think one of the important things to keep in mind, which Satya is pointing to, is that it's not really just the cost of Azure and the ability to optimize across the Azure workloads. It's that really even our first-party workloads and apps that are built, right, are built on the same platform, and we're able, because we are a hyperscaler and because we have a large commercial cloud first-party as well as consumer apps like Bing that are first-party, we're able to take advantage of that and GPU utilization, AI services utilization across the stack. And so it's not just sort of where Satya went, it's even a broader benefit of being a hyperscaler.
Thank you.
Thanks, Rima. Joe, next question, please.
Our next question comes from the line of Keith Bachman with BMO. Please proceed.
Good afternoon, good evening. Thank you for taking the question. Amy, I wanted to direct this to you if I could. On your prepared remarks, you commented that you thought that operating expense growth would be low. I was hoping to just maybe flesh that out with some broader comments. Excuse me. Could you talk about how you see any kind of directional color on how you see gross margins evolving given mix, and particularly supporting generative AI, and or any other comments that might help shape our thinking as we begin to look at the operating margin for the next fiscal year? Thank you.
Thanks, Keith. This is probably a good opportunity to explain a bit about how I think about where we are, which is we look at all of the businesses we're in, and we look about our competitiveness in those businesses. And this is where Satya started to comment a bit about our relative performance versus absolute. And I'll tell you that the energy and focus we put right now is on relative performance and share gains. Right now, we have the largest commercial cloud with increasing commitments by customers, with new workloads, new TAM opportunities that Satya is talking about with customers, and our focus is going to be and will be on continuing to take a growing share of that while we continue to focus on our customers' success and getting a ton of value out of what we are selling, whether that's the E5 product of Microsoft 365, whether that's Windows 365 to help, maybe it's on compute costs and PC cost, whether it's working across the Azure stack. And so with that opportunity, plus in our consumer business, the largest number of active devices we've had in Windows that are still being used more, being able to focus on Edge share and Bing share and gaming, bringing it to the PC as well as across to mobile. These are the opportunities that we focus on as we think about next year. And so if we feel like, and I do, that we are well positioned to continue to take share in so many key places, then I say, great, and we want to be able to focus on investing in AI, which I talked about, will increase COGS growth, but we're committed to making sure we have healthy profitability by keeping operating expenses low. And so what really this past year has been about, but what Q3 starts to show is our willingness to pivot to the future to make sure we can keep all those commitments that Satya listed. So while I know that's not giving specificity, it is in fact how we think about long-term success, is being well-positioned in big markets, taking share in those markets, committing to make sure we're going to lead this wave, staying focused on gross margin improvements where we can. Some of them will come in AI over time, given our commitment to the build-out. We will charge for those AI capabilities, and then ultimately we'll deliver operating profit.
Yeah, I mean, just to add to it, during these periods of transition, the way I think as shareholders you may want to look at is what's the opportunity set ahead? Do we have a differentiated play to go after that opportunity set, which we believe we have? Both the opportunity set in terms of TAM is bigger, and our differentiation at the very start of a cycle, we feel we have a good lead and we have differentiated offerings up and down the stack. And so therefore, that's the sort of approach we're going to take, which is how do we maximize the return of that starting position for you all as shareholders long term? That's sort of where we look at it. And we'll manage the P&L carefully, driving operating leverage in a disciplined way, but not being shy of investing where we need to invest in order to grab the long-term opportunity. And so obviously we will see share gains first, usage first, then GM, then Op Inc., right? Like a classic P&L flow. But we feel good about our position.
All right. Many thanks for the answer.
Thanks, Keith. Joe, next question, please.
Our next question comes from the line of Karl Keirstead with UBS. Please proceed.
Oh, thanks. We've had a lot of questions on AI and Azure, so maybe just to round it out, just on the Office 365 business, Amy, 16% constant currency guide for June, not really seeing much seat degradation despite obviously a tight labor market, so it's proving to be very resilient. Could you just unpack the sensitivity to that headcount reduction, given that across your customer base, at least slower rate of hiring, just given that this is a enormous seat-based business, it doesn't seem to be showing up. Maybe you could just help us understand what's driving that continued seat growth and how durable that is.
Yeah, thanks, Karl. I think I would step back and say we have seen, the Office 365 suite, but broadly the Microsoft 365 suite adds a ton of value for users. And so if you think about the users and on a global base, we've been able to add users, which you continue to see. We still have in the frontline scenario and an SMB opportunity to continue to grow. And in the enterprise, where we are a basic productivity tool, the labor market is still tight in most places, and we continue to see customers committed to the value they're getting. And so this is not something that I think our focus has really been on continuing to get healthy renewals, continue to add new products at renewal where it makes sense to save customers money and increase value. And so I think that's the story of the resilience you're seeing. And of course, we did have a good E5 quarter, which you're starting to see, and it helps on ARPU.
Thanks, Karl. Joe, next question, please.
The next question comes from the line of Rishi Jaluria with RBC. Please proceed.
Oh, wonderful. Hi, Satya. Hi, Amy. Thanks so much for taking my question. Nice to see continued resilience in the business. I wanted to get back to the topic of AI, but think maybe a little bit longer term. How are you thinking about the potential for regulation around AI, some of the concerns around data and customer privacy and governance? And what do you think you can do to maybe quell some of those fears that governments and customers and organizations have around that? Thanks.
Yeah, thanks, Rishi, for the question. So overall, we've taken the approach that we are not waiting for regulation to show up. We are taking an approach where the unintended consequences of any new technology is something that from day one we think about as first class and build into our engineering process. All the safeguards. So for example, in 2016 is when we put out the AI principles. We translated the AI principles into a set of internal standards that then are further translated into an implementation process that then we hold ourselves to internal audit, essentially. So that's the framework we have. We have a chief AI officer who is sort of responsible for both thinking of what the standards are, and then the people who even help us internally audit our following of the process. And so we feel very, very good in terms of us being able to create trust in the systems we put out there. And so we will obviously engage with any regulation that comes up in any jurisdiction. But quite honestly, we think that, that the more there is any form of trust as a differentiated position in AI, I think we stand to gain from that.
All right, wonderful. Thank you so much.
Thanks, Rishi. Joe, we have time for one last question.
And our last question will come from the line of Michael Turing with Wells Fargo. Please proceed.
Hey, great, thanks. I appreciate you squeezing me in. I want to ask a question on the consolidation play that Microsoft is positioned for, given that's something we hear clearly top of mind for IT decision makers currently. You have clear plays there across security, infrastructure, apps, and other areas. So it would just be great to hear your view on the Microsoft consolidation playbook in the current environment, and if there are certain areas you're particularly focused on or seeing the most traction around. Thank you.
Yeah, I mean, I'll start and maybe you can add. I think any reference to this is in the context of Microsoft 365 and Office 365, but fundamentally what we are focused on is making sure that the customers are able to derive the value out of our offerings, right? Whether it's the Microsoft 365 suite value, which is significant, whether it's E3 or E5, and we want to make sure that they're getting deployed, they're getting used, and that's obviously going to lead to our share gains in many cases. Same thing in security. That's a place where this quarter you saw some good results from us. And same on up and down the stack across Azure, right? So when you think about AI, the anatomy of an AI application is not just an AI model. In fact, ChatGPT itself is a great example. ChatGPT, for example, uses Cosmos DB as their core database. And so therefore, we want to make sure that our services, as they are competitive, get used together, whether it's at the IaaS layer or the PaaS layer or the SaaS layer.
And maybe one thing I would add, Michael, is that I know the question is consolidation, but another aspect of that is that some of the new business process automation work that's going to get done, whether that's the Dynamics workloads that we've talked about, it also will benefit from having the AI services available in Azure, from having the core Azure capabilities as well as actually some front-end stuff that people are buying in Microsoft 365 to close these loops in a new way. And so I think maybe it's not the traditional definition of consolidation, but when people look and say what vendor adds a lot of value and has the tools that we need, and in many instances already own, to be able to do this business process work, I think we have a great value and frankly, probably leading tools in almost every vertical.
Great, thank you.
Thanks, Michael. That wraps up the Q&A portion of today's earnings call. Thank you for joining us today, and we look forward to speaking with all of you soon.
Thank you all. Thanks so much.
Portion of today's earnings call. Thank you for joining us today, and we look.
All right, guys. So that is the end of the earnings call today. Let me know what you think. Again, Microsoft flying up today, tapped 300 for a little bit on this huge move up here. Crazy, ridiculous move. This thing flew up. Just an absolutely huge move for Microsoft today. And again, let me know what you guys think. Hit that subscribe button if you haven't already. Tomorrow, we've got a ton of more data, a ton of more earnings. We got Meta Intel earnings tomorrow. And then tomorrow morning, we've got Boeing earnings in the morning, as well as, let me see if we got any economic data. It's just a busy couple days here. So again, hit that subscribe button if you have not already. Hit the notification bell. Again, if you want to day trade futures, most pro traders trade futures in day trading because there's no PDT rule. You could day trade short the market without PDT restriction, and Top Step is the most legit futures funded program in the world. They give you a demo if you can hit the target while following their rules. They fund you between 50 to 150K with a 90% split. Most people will fail, but regardless of that, it's a lot cheaper to lose a Top Step account than it is to lose, thousands trying to do the same thing yourself. But if you're good enough, you still keep 90% of your profit once you're funded. And so it's a perfect middle ground. If you want to check it out, here is the link. Good luck. Again, Microsoft flying up today, absolutely flying up. Bed Bath and Beyond at $14. Here's Google back at 106. We'll see if we break 300. We'll see what happens. Good luck. Love you all. Y'all be safe. I'll see you guys tomorrow.